Senator Case, Senator Dockstader,
Here.
Senator Ide,
Here.
Senator Pappas,
Excused.
Sorry.
Representative Brown,
Here.
Representative Campbell, Representative Lean,
Here.
Representative Lucas,
Present.
Representative Riggins, Representative Storer,
Here.
Representative Stivar,
Present.
Representative Worf,
Excused.
Co-Chairman McEwen,
Here.
Chairman Locke.
Present.
Mr. Chairman, you have a quorum.
Great. Thank you, everyone, for coming. Just a couple of little piece of business. We do want to welcome Senator Dockstader, our newest member, and thank you for being part of our Revenue Committee. We really appreciate you being part of the team here, and thank you so much. Thank you so much. And so we really wanted to welcome you as well. We want to thank all of you in the room, welcome you here as well. And we really do appreciate all of you being here. I know we've got a lot of fun things to do. We're going to make this meeting very quick and tight. We're going to do time discussions and keep these things, the conversations very focused today. You'll see that as we go. One thing I would like to do before we start is just take a brief moment of silence for our loss of Representative Eklund that just occurred, I believe earlier or the end of last week, I guess, right? And I just want to take a moment of silence in this room for him, his family. He served, was a great servant of the state of Wyoming, and a very respected and a great individual to work with. I didn't have a lot of time working with Representative Eklund, but I really enjoyed the man, his insight, his guidance, and his wisdom. But if we can just take that moment here briefly, thank you. Thank you all for taking that moment of respect for one of our representatives. And let's see, I guess, anything else, LSO, we need to discuss before, or co-chair, anything we want to go over before we kick the tires and light the fires?
I think we're ready.
All right, very good.
Mr. Chairman.
Yes.
And you had approval of the minutes on there.
Oh, very good. So let's start there with approval of the minutes. Committee? Do we need kind of move the approval, or are we okay? Any committee, what's your pleasure? Moved by Representative Brown, seconded by Representative Riggins. Any discussion on the minutes? All right, if there's no discussion, let's go ahead. Do we need to take a voice vote, or can we just a voice vote's acceptable? Very good, okay. All in favor, say aye.
Aye.
Opposed? All right, very good. So we have to have our contrary, or else we would not. All right, the minutes have been approved, so I guess we're ready to move to the first topic. Electronic notices for Department of Revenue. I think we'll probably go ahead. Do you want to start with a review of the bill? And then if maybe the department can come up and talk, or do you want to all come up together? You guys can come up, if you're going to speak to it, you guys can come up, and maybe it would just be worth doing that so we can knock to it pretty quickly.
Good morning, Mr. Chairman. Josh Anderson, LSO. This issue was first discussed way back at our first meeting up in Gillette. The idea of clarifying how the department can send notices when they're required to in statute. So the bill, just moving quickly through it, starting on page 2, you'll see the stricken language there. Notices required to be mailed by the department under this article, if mailed, shall be sufficient. It strikes that language and just says, written notice by the department using contact information provided by the taxpayer shall be sufficient for purposes of this article. Written notice may be provided electronically by the department if the contact information provided by the taxpayer includes an electronic communication option. And then the remainder of the bill, Mr. Chairman, is primarily striking out mailing requirements and just clarifying that the department's just required to give written notice under that new language above. So you see that change on page 2, line 18, page 3, line 11 and 23, on page 4, lines 12 and 13, on page 5, lines 3 and 4, and again on page 5, lines 10 and 11. So that's the bill very quickly, Mr. Chairman. I'd take any questions and/or pass it off to the department.
Committee, questions for Mr. Anderson?
Thank you, Mr. Chairman. Thank you, Mr. Anderson. I just want to make note that this bill explicitly makes it so it's an opt-in opportunity for people to receive an electronic filing.
Mr. Anderson, clarification?
Mr. Chairman, Representative Lean, yes, I believe that's correct. So if they if they don't provide electronic communication information, then it would still be required to be provided by whatever contact information they've provided.
Thank you.
Thank you, Mr. Chairman. Mr. Anderson, just a real quick question. Would that opt-in be electronic, or will they have to actually fill out a little form? Or how will we know that somebody actually opted in?
Mr. Anderson.
Certainly a good question, Mr. Chairman, and I might defer to Director Fanning to
Director
answer
Fanning.
that if he has an answer.
Please feel free to answer that.
Thank you, Mr. Chairman, Mr. Co-Chairman, members of the committee. Brett Fanning, Director of the Wyoming Department of Revenue. So, Mr. Chairman, through you to Representative Lucas, this is an opt-in that comes forward on our WIAFs platform, our electronic platform. So in order to get this electronic option, it's already an opt-in that comes on our website. So any hard copy filers that we have right now with no electronic option, this bill does not impact them. It does not impact them. It's already an electronic opt-in that comes with doing correspondence with the Department of Revenue electronically.
Other questions for either the department or LSO or Senator Ide?
Thank you, Mr. Chairman, Mr. Fanning. On that, so if you do opt in, does that mean you get rid of the mail part of it if you do opt in? So that automatically, so you don't get both. Thank you, Mr.
Director
Chairman.
Fanning.
Mr. Chairman, Senator Ide, great to see you as well. On this one, as right now, they would still receive hard copy documentation. This allows the department the flexibility to start exploring those options so that we can move forward with electronic medium. The thought is going forward is that if we have this language in statute, then we can work towards utilizing our online platform a little more robustly. What I mean by that is if we have a notice that we have to send you from the Department of Revenue, you get an email from the department saying, hey, go check your online account, and then that notice is actually in there. So the intent going forward is that you're only going to receive one or the other, either hard copy or electronic, not both.
Follow up, or you? Okay. Any other questions for either LSO or the director? Department. Okay, no questions for them. Public comment. Anyone wants to comment on this bill? And all right, this is an exciting one. I can see that. What's that? And do we have someone online? Oh, very good.
Mr. Chairman, we have Brett Moline online.
Okay, great, thank you.
Mr. Chairman, Brett Moline, Farm Bureau, are you ready for me?
Yes, Mr. Milling, please proceed.
Hey, thank you, Mr. Chairman, Committee. Brett Moline, Wyoming Farm Bureau Federation. I really appreciate this bill. I appreciate that it's an opt-in, that it's not mandatory, that it has to be just through electronic. I'm sitting in support of the bill, and I'll take any questions you or the committee may have for me, sir.
Great. Committee, questions for Mr. Moline? Mr. Moline, thank you so much for coming in here, and we always welcome your comments. Thank you for being here today.
Thank you, sir.
Anyone else online? All right. Anyone else in the room who wants to speak to this bill? Very good. Okay. If there's no other public comment, we'll close public comment and I'll ask the committee, what's your pleasure?
Move the bill.
Second. All right. We got the co-chairman moved the bill. Representative Stivar seconded it. So comments, discussion on the bill. All right, it sounds like there's no discussion from the committee. All right, let's go ahead and take the vote.
This is a roll call vote on 26 LSO 0262, Department of Revenue, Electronic Communication. Senator Case? Aye. Senator Dockstader? Aye. Senator Ide?
Aye.
Senator Pappas is excused. Representative Brown?
Aye.
Representative Campbell?
Aye.
Representative Lean?
Aye.
Representative Lucas?
Aye.
Representative Riggins?
Aye.
Representative Storer?
Aye.
Representative Stivar?
Aye.
Representative Worf is excused. Co-Chairman McEwen?
Aye.
Chairman Locke?
Aye,
That is 12 aye to excuse, Mr. Chairman.
very good. All right, so I just want to take a moment to say this might be the first time I've ever been ahead of schedule, so that might be some new record. All right, so we'll move on to topic number 2, combination of sales and use tax statutes. And I know this bill was fairly long, but what this was really an intent to do, just to kind of put everybody in perspective, is to try to merge these two sections together. And so we'll go ahead and, not really to change the taxes in either one of these sections, but just to merge the two, because there was a large duplication between the two sections. But anyway, we will press ahead and discuss that. I will start with, let's go ahead and bring the department and LSO up here together, because my guess is the comments will probably be similar to the last one. Questions for both?
Morning again, Mr. Chairman.
Good morning. Mr. Anderson, please proceed.
Sure thing. Josh Anderson, LSO. So yeah, as you noted, this idea, we kind of started talking about it last year, and then the committee asked for this bill at its last meeting in August, with the idea of combining the sales and use tax. Currently, sales tax is in Chapter 15, and the use tax is in Chapter 16. But a lot of the language between those chapters is identical. And we had a situation a couple years ago where we passed a number of changes to the sales tax bill, did not make the conforming changes to the use tax, and then had to come back with another bill a year later to make those conforming changes. And so that's kind of where this idea came from, of it would be simpler, the bills would be shorter if the two chapters were combined. So this bill, not intending to change any law, pretty much all the red language you see in here is directly from the use tax chapter, with maybe a few conforming changes to make it fit, as they're structured slightly differently between the two chapters. But just quickly, I kind of go through the first change on page 2, the definition of sale. Again, we're just trying to clarify that sale, when used, would also include a purchase, to kind of, again, combine that idea of a use tax into a sales tax. You'll see the definition of vendor on top of page 3. That's not being changed. I did note that there are some differences between the two definitions. I didn't know if it was necessary to make that change, but that's just included for committee information there. On page 4, again, no change to the definition of NAICS, but just a note, and this actually came from Director Fanning, that classification, or the current version that we use, is 2002. That's getting fairly old, and the committee could consider updating that reference, but again, no change as currently drafted. On page 5, again, this is just language from the use tax statute that was slightly different from sales tax and the definition of telecommunications service. And just a simple citation change there. On page 6, again, here we're copying some definitions over that were only in the use tax statute. Purchase price, storage, and use are defined there, Mr. Chairman. And then this, on page 7, this preemption language was in the use tax code, but not in the sales tax. State preempts the field of imposing a tax on sales and purchases of tangible personal property. As provided in this article, no county, city, or town may impose those taxes except as provided in this section. There was a subsection E in the use tax that's not included here. Again, copied for the committee's information, and then didn't include it simply because I wasn't exactly sure what that language was intended for in the use tax code. On to page 8, Mr. Chairman. Again, this is in the imposition section, and just again clarifying that the tax would be imposed on the sales and upon purchases of persons making first use of taxable services or storing, using, or consuming taxable personal property or specified digital products in the state. I did have a question earlier about the specified digital products. Those are currently taxed in both sales and use tax. And in subparagraph P of that section, not included in the bill because we're not amending it, but that kind of lays out additional details on how those products are taxed. But I did have that question earlier and thought I'd just highlight that for the committee. You'll see the change at the top of page 9, Mr. Chairman, striking out a reference to 3916-301 through 311. Those are the contractor use tax provisions, and those are being repealed at the end of the bill. And I'll mention that when we get there, but just the staff comment notes that if the committee did move this forward, there would be a number of additional provisions that aren't currently in this bill where we'd be striking out those references to Chapter 16 being repealed. And those would be both in Title 39 and elsewhere. On bottom of page, Mr. Chairman.
Sorry, Mr. Anderson, so just real quickly, you're in here, so you're saying there are some other areas where this repeal would affect that this bill does not correct? Is that what you're referring to
Correct,
here?
Mr. Chairman, and that was just an effort to keep this bill shorter for the committee to look at.
Okay.
But there will be quite a few number of provisions where we'll just be bringing them in and just striking out references to 3916, whatever, because those are all be repealed.
So this bill would be amended with those changes, is
Yes,
that correct?
That's.
So this was shortened a bit for review more than
Correct.
anything, and it's just those changes that you would bring back in?
Yeah, so it would be essentially a number of conforming changes. So if the committee did move this forward, just wanted to make you aware that it would look a bit different, a bit longer with all those changes included, but
Okay.
kept those out at this time just to make it a little easier to go through, Mr. Chairman.
Thank you, Mr. Anderson, I appreciate that. I just wanted to be sure I understood. Thank you.
Mr. Chairman, bottom of page 9, we're adding the word "and purchases," again, just to add that clarification. And then the very bottom of the page, just some conforming language that was in the use tax, not in the sales tax, on the definition of a basically of vehicles, motor vehicles. Page 10, again, mostly conforming language that was in the use tax, not in the sales tax. Just clarifying that for purchases for vehicles as gifts, they could be inside or outside the state of Wyoming. Again, bottom of page 10, the taxpayer is every person purchasing goods or services and every person making first use of taxable services or storing, using, or consuming tangible personal property or specified digital products from a vendor who does not maintain a place of business in this state. And then again, adding some clarifying language there to specified digital products. They're only subject to the tax as specified in subparagraph A1P, as I mentioned earlier. And then liability is not extinguished until the tax has been paid, except that a receipt given to the state by a registered vendor is sufficient to relieve the taxpayer or the purchaser from further liability. Again, some language in the staff comment, bottom of page 11, that I did not include from the use tax chapter, but is included there for the committee's review. Over onto page 12, again, mostly conforming changes, adding the word purchases and deleting sales tax and adding excise tax. Onto page 13, Mr. Chairman. Again, just adding some language here from the use tax statute in the exemptions that was different, but you'll see in the staff comment there, the language that was in the use tax code doesn't actually appear to be an exemption. It may be, if the committee wants to keep this language, it might be advisable to relocate this to the imposition statute. Just clarifies that tangible personal property sold for delivery is deemed sold for storage use or consumption herein and is subject to the tax imposed by this article unless the person selling the property has received a signed certificate stating it was purchased for resale. Mr. Chairman. Again, on page 14, for licenses and permits, just adding some language from the use tax.
Let me step back on that one just a little bit. Committee, do you have any questions on that particular issue there? Any comments on really that bottom of page 13, the staff comment? So the long and the short of it is this paragraph, it's in the wrong, not in the correct place as an exemption, and so can you kind of just go into that just a little bit more detail?
So yes, Mr. Chairman, so you'll see the language in subparagraph F is primarily saying that if you have property delivered to this state, it is subject to the tax unless you have a certificate saying you purchased it for resale. And you'll see there that in the exemption intro language, it's exempting sales of property that are essential human goods and services. And so if it is an exemption, I don't know that it's an essential human goods and service, but to me, I think that language is more clarifying the imposition of the tax. And so if we wanted to keep that language, we might want to move it to 103, which is the imposition section.
I see. Okay, so we might want to take a note to discuss that possibly, but thank you.
Mr. Chairman, on to page 14, again, we're adding if you want a license to have sales tax, you need to provide the name and address of all agents operating in the state. That language is revised, but comes from the use tax statute, and then all places of business together with other information. Again, kind of trying to conform these two together from the sales and use tax language. Over to page 17, Mr. Chairman, this is dealing with compliance and collection. And again, just clarifying that every person purchasing goods who does not pay the tax and every person storing, using, or consuming tangible personal property purchased from a vendor who does not maintain a place of business in this state is liable for the tax imposed by this article. And then bottom of page 17, related to payment, except as otherwise provided in this chapter, there is levied and shall be paid an excise tax at the rate under 3915-104 upon sales and purchases in Wyoming. The vendor shall collect the tax and give the purchaser a receipt displaying the tax paid separately. And then bottom of page 18 over to 19, the tax shall not be collected if the vehicle was previously registered by the same non-resident owner in another state. The county treasurer may collect the tax due and any interest, penalties, or costs of the collection through the use of collection agency or by the filing of a civil action. And then in paragraph 6, if any vendor discontinues his business or sells a stock of goods, he shall make final return and payment within 30 days thereafter. His successor in business shall withhold from purchase price an amount equal to any taxes, penalty, or interest due until the time the former owner produces a receipt showing all amounts due have been paid and no taxes are due. If a successor fails to withhold from purchase price the amount due, the successor is liable for the same. And again, that's that was one of the significant differences between how the use tax or the sales tax clarified discontinuing a business versus the use tax. Over to page 20, Mr. Chairman, a new paragraph 5, the department shall allow a credit for sales tax legally imposed and paid to another state on a purchase equal to but not exceeding the liability for use tax under this article on that purchase. The department may require that any claim for a credit be substantiated in writing to showing the sales tax paid. And then the staff comment there is just clarifying that it was renumbered, so the numbers wouldn't match up if you try to find that in the use tax. Oh, that should be 3916-109. I'm sorry, Mr. Chairman. In the staff comment. Mr. Chairman, bottom of page 20, statute of limitations. Again, just adding some language that was in the use tax chapter, but not in sales tax. Every vendor and person storing, using, or consuming tangible personal property shall preserve within this state for 3 years suitable records and books as may be necessary to determine the amount of tax for which the vendor or person is liable under this article. All records, books, and invoices shall be available for examination by the department during regular business hours, except as arranged by mutual consent. Over to page 21, this is distribution. Again, the stricken language there, this is not a difference between the two sections, but it's just referencing that 2004 date, and so essentially archaic language there, the stricken language. The new language, so under sales tax, there's an existing $40,000 distribution, and then under use tax, it's $10,000, and so this just adds that $10,000 use tax distribution. You can see in the staff comment there that $10,000 is required monthly from use tax. The committee could consider combining this to $50,000 of any of the taxes. When I spoke with Director Fanning, he indicated that may require some programming, so just included that there for the committee's information. Over to page 23, just providing that taxes collected shall be remitted in full, or this is related to vehicle registration, shall be remitted in full by the county treasurer to the department monthly or as required by the department together with reports. County treasurer shall be reimbursed monthly in amount equal to 5% of the amount remitted to the department in preceding month. And then, Mr. Chairman, bottom of page 23, this is going into the local sales and use tax, and just adding that clarifying language that it would be for both sales and purchases for storage, use, and consumption. And any tax imposed under this article on retail sales, admissions, and services shall also impose an excise tax at the same rate. And then finally, Mr. Chairman, again, another conforming change on 25. This is, again, the contractor sales tax provisions. And you'll see there the existing language on 25. The liability of the company is limited to 3% plus the increased rate under, and it's striking 3916 because that's being repealed, saying 3915-104B, which is the additional 1%. And just in the staff comment there, you'll see the committee could consider, instead of referencing those provisions, they could just change that to 4%. And then finally, on page 26, again, that's the repeal section of repealing all of Chapter 16. So that's the bill, Mr. Chairman. Take any further questions or
All right,
or turn it over.
committee, questions? All right, I think we lost one of our person who probably did the deepest dive on this, but let me take a step back and ask a couple questions. So I'm going to kind of go back to your staff comments. You had a couple of staff comments in the earlier part of it that you talked about the fact that there were some differences, I think in the definition of vendor. I'll start there, probably. That's the page 3, I think it was. So you had a couple of those where there was a difference. And so going through this, just making sure those differences were left out, right? So they were not amended in. Is that, that's questions to you, Mr. Anderson, or Director Fanning. We're comfortable with that. We're comfortable that we don't have a change in here that is going to change the way we do things.
So, Mr. Chairman, so yeah, in most of the places where you see the red language, it's because there were differences that I did include. When certain places where there were differences I didn't know should be included, instead of making that redlined into the bill, I just included that as a staff comment. So again, I think those were mostly places where, at least in my review of the bill, I didn't think the change would be necessary, but wanted to include that for discussion.
Okay. So another question I have then, going back to that section that I had discussed before, I believe that was page 13. I wanted to ask about that. Just real quickly, so in moving this, if we move this to this other section, if we were to amend and make that move, no, it will not, moving it won't change a thing about what's said here, right? It'll just move it out of this section into the other section, but it won't change anything. Is that accurate?
I believe so, Mr. Chairman. Yeah, I think it would just kind of be I think it would have the same effect, just would not be structured as an exemption, which again, I don't know that it really is an exemption, but it's currently in that section.
Okay. Thank you. And no questions from the committee. Another question I have now, I just want this for clarification. So the intent with this bill, in my opinion, and committee, certainly feel free that you please step up with your questions and concerns about this, because one of the concerns we had was the one that you mentioned, where I think we saw some of that digital services language. And my recollection was 2 years ago, we sort of struck some additional changes that were going to go in there. Now, my understanding of this bill, and when I reviewed it, I think it's accurate, but I think sometimes the language brought things back. We wanted to make sure we understood. There's no new taxation put in this bill. Is that accurate? This is truly just merging the two and making sure that no new taxes are implemented in here, correct?
Mr. Chairman, yes, that's the intent, is just to copy existing language from use tax and merge it with the sales tax, not intending any substantive changes.
Okay. And I guess I'm going to ask the question I asked of Mr. Anderson before, but Director Fanning, of you, of some of those areas where we left the language out, was this just a situation where we really truly just didn't need it here? I mean, the language is there that was acceptable. We're comfortable, and just for you to clarify, thank you.
Thank you, Mr. Chairman. Again, Brett Fanning, Department of Revenue. I do want to go back to the vendor definition on page 3, carrying over to page 4. This is one that we likely want to take a look at merging together. So the first one talks about a vendor is any person engaged in the business of selling at retail or wholesale tangible personal property. Then if we come down into the definition of what a vendor is in our use tax statutes, then we start talking about having locations in Wyoming would qualify as having the license with us. Again, there's, as Mr. Anderson appropriately noted, there's no new taxation here, but as far as a licensing requirement, it's likely up to the committee if you have a location in Wyoming or you have agents operating in Wyoming. Do you want them to have to license with the Department of Revenue? Again, there's still gonna be tax due. We still have imposition statutes here. But if you have folks just operating in Wyoming, do you want them to have to license and collect our tax as opposed to use tax being reported by them? That's the conversation. From an administrative perspective, right now, if you want to make it the same as it is as of this second, the committee probably wants to look at merging those. That's probably what you'd like to do. because we're talking about locations here. If the committee says, nope, the only folks that we want to license and collect Wyoming tax in Wyoming are vendors, and that's people who sell at retail, people who sell at wholesale, and then people who do admissions or other taxable services. So that's kind of that conversation there, Mr. Chairman.
Thank you for that clarification. Senator Ide, please.
Yeah, thank you, Mr. Chairman. Director Fanning, I'm glad you clarified that. That was where I was stumbling around here on this definition of vendor. And just to be clear, to keep it the same as it is right now, we would want to merge what is said in this staff comment to keep it status quo. Is that correct?
Mr. Fanning.
Mr. Chairman, Senator Ide, yes, correct.
All right, other questions?
Mr. Chairman, Representative Storr had a question.
Oh, Representative Storr, I'm sorry, my eyes are not quite moving past the end and seeing you there. Welcome and thank you. Please proceed.
Thank you, Mr. Chairman. I just wanted to step back and ask the question of Mr. Anderson and Mr. Fanning, if at the end of the day, they have an opinion to share about whether the changes and the merging of the two sections, does this make it easier to administer the provisions in the sales and use tax statutes? Does it make it easier to revise the statutes in the future for legislators? I just want to make sure we're actually doing something that's helpful.
Mr. Anderson, Director, whoever would like to respond.
So I'll defer to Director Fanning for the first part. For the second part, it would certainly shorten bill drafts. So if we're making changes to sales tax code currently, we also make those same changes to the use tax code. So it doubles the length of the bill. So it would shorten bills and then also would eliminate the chance that we would make a change to one and not make the change to the other. So again, I don't know that it functionally does much more, and I'll defer to Director Fanning on how the administration would.
Director Fanning, please.
Thank you, Mr. Chairman. Representative Storr, does this make it easier to administer? Yes, absolutely. We knew that when we took this up as an interim topic that this bill draft was going to be long. We did. And I really got to give some really big kudos to Mr. Anderson and the staff at LSO, because there was a lot of work and a lot of collaboration in putting together this bill draft. We knew it was going to be long. But then going forward, as Mr. Anderson noted, all bill drafts are shorter if they reference sales or use tax. Then when you have a constituent that's asking about, hey, why am I being sales or use taxed on fill in the blank? They can go to one spot and take a look at this. And we knew that there would be some of these questions because I've outlined before that there are differences in the sales or use tax. One of the staff comments basically says sales or use tax, they're meant to be the same, but there are a little bit differences here. And so I do want to go into some of these staff comments after if I've appropriately answered Representative Storr's question. The answer is yes.
Representative Storr, follow up.
Thank you, Mr. Chairman. I just want to say thank you to the staff of the Department of Revenue and LSO for working through this with diligence. Thanks. Thanks for those answers.
Thank you, Representative. All right. And so, Director, please proceed with your other concerns here.
Thank you, Mr. Chairman. On page 4, the staff comment about the NICS code, that's likely one that can be considered. My quick research says the newest version is 2022. Mr. Chairman,
Sorry, Director, hang on a second. That was on line 22. On page 4. Page 4.
Yes, sir. Page 4,
Oh, sorry.
Mr.
Okay.
Chairman, line 22.
So again, this change really doesn't impact, are you already adhering to the new NAICS code, or how does that work currently?
Yeah. Mr. Chairman, that's an excellent question. It relates in a couple different areas. Right now, we just take a look at the most active NICS codes. used to relate to manufacturing per se. A few years ago, that NAICS code requirement was removed just based on the definition of manufacturing. Yes, we adhere to the most current NAICS codes that we have available when we do our research. So the answer is yes, we adhere to the most current available.
Okay. Thank you. Any other questions? Fair enough. So that really, this would just bring you up to, bring it current with the practice you're adhering to now. Is that accurate?
Yes, Mr. Chairman.
Thank you, Director. Please proceed.
Mr. Chairman, on page 2, on page 5, lines 21 through 23, this is where there was a difference in the telecommunication statutes and sales and use tax. This is a great find by LSO on this. This is a streamlined definition. I researched it this morning. And so this includes cable service and some commercial mobile services that we want to be consistent with the streamlined sales tax agreement. So really good insight there from LSO. Moving on to page 6, lines 11 through 13. My comment says, thank you, LSO, on this one. We originally had a question about the definition of sales price and conforming with the streamlined sales tax agreement. Great job on LSO on navigating those. Really good job. Moving on to page 7, lines 4 through 10. The staff comment on lines 4 through 10, this is a key component of the streamlined sales tax agreement, where the states are the ones who determine what's taxable and what's not. And so really good conforming language. This just says the state is the one who determines what's taxable and what's not in a state, conforms with the streamlined sales tax agreement. And then it goes on to say no city, county, city or town or political subdivision can impose it without having the state there.
Representative Campbell, please.
Thank you, Mr. Chairman, and thank you, Director. So basically, if I'm understanding this right, we're just clarifying the state's authority. We are, I don't know if clarify is best word, but this is, stating the state's authority to where, this will make it to where the counties and the towns can't mess with things, correct?
Director, please.
Mr. Chairman, Representative Campbell, the answer is yes. Remember, this language is already in statute right now. It's just being moved to a different spot.
Okay, thank you for the clarification. Thank you, Mr. Chairman.
All right. Please proceed, sir.
Thank you, Mr. Chairman. And then on page 7, lines 19, 20, 21, the staff comment there, I do have a little bit of insight on it. So that statute right there says that if it's sales taxable, it's also use taxable. And so this is probably one, if you're making stars next to items on your list here, that we likely want to include, because it says if it's sales taxable, it's also use taxable. And then in addition, the sales and use tax are both distributed the same way. That's what that staff comment means on page 7, lines 19 through 21. Likely something that the committee may want to consider so that everything still functions as it does of this second.
Okay. Representative Campbell.
Thank you, Mr. Chairman, and thank you, Director. Does that have to do with specifically the use tax, with the ability for the county to have control over some use tax? I was wondering how that fits in there, Director. Could you clarify a
Director.
little?
Mr. Chairman, Representative Campbell, yes, this is use tax language right here. There is some corresponding sales tax language already in statute. But right now, if it's sales taxable in Wyoming, it's also use taxable. And both of those items are reported to the state of Wyoming. And then we distribute it out to our local cities, towns, and counties. So local jurisdictions don't have the ability right now to say, yep, it's use taxable if the state doesn't say it's use taxable. So again, just clarifying that, hey, we want sales and use tax to work the same way as they do right now.
And just for clarification, if we leave it out, it actually changes how, does it create any confusion? Does it change how you would do things if we left it out?
Mr. Chairman, I think Mr. Anderson and I would have to review those statutes one more time to make sure on that. Right now, I'm under the impression that without this in the bill, it does change it slightly. If there's not language specifically outlined in a sales tax statute that says sales and use tax are gonna work the same way and be distributed the same way.
And that's how it's done today.
Yes, Mr. Chairman.
Thank you, Director. Okay. Other question? Okay. All right, please proceed, sir.
Thank you, Mr. Chairman. Specified digital products was a conversation piece. They are taxable right now. They're taxable if you get permanent use of that product. So whenever you see imposition statutes in this bill draft, or you have constituent questions, please remember that those are already in statute right now. They're just being moved to a different chapter.
Any questions from the committee on that one? I know that was a concern by some folks that, and do we want an example of that to make it clear to the committee, or is the committee okay? Do we understand? Okay, let's press. Thanks.
Okay.
Please. Sorry.
Thank you for mentioning that, Mr. Chairman. Yeah, just for fun, I'd appreciate it.
Okay, you want to give an example, or?
Sure. Thank you,
Okay,
Mr.
please.
Chairman. Representative Lucas put me on the spot on this. So there are basically three different types of specified digital products, and they have to be downloaded for permanent use. So if you download, say, a video and you get permanent use of it, it doesn't go away in 30 days or something, that's a specified digital product. If you download a ringtone that you get forever, that's a specified digital product. And finally, if you download a book, say an ebook, and you have that forever, it doesn't go away after 30 days or a subscription ends, those are examples of specified digital products. When you download them for permanent use, they're taxable in Wyoming.
Co-chair, please.
I just want to make sure I understand. If I download a ringtone, that's taxable?
Director, please.
Mr. Chairman, Mr. Co-Chairman, correct.
Wow. Thank you.
Mr. Chairman,
Senator Case, please.
so where this all comes from is everything is evolving away from you actually purchase something to where you kind of have rights to it now. So you used to buy the programs that are on your computer, and then you would pay tax at that retail store, you get a disc, plop it in. Then you downloaded that program later on, you still paid tax on it. Now you have a service agreement where that's cloud-based program and you keep it, and you, in essence, rent it or rent the rights to it. You don't actually have, and once you stop paying that, you don't have it anymore. Whereas the old program, you had the disc, it was on your computer and you had it forever. It's the way things have changed. So the tax policy has to change too.
That subscription concept is significant, but. Thank you, Senator. Thank you for the clarification. Please proceed, sir.
Thank you, Mr. Chairman. On page 11, the staff comment on lines 24 through 29 references tax liens and the preference of the tax liens, likely something the committee would want to consider if we want to make it exactly functional as how it is today.
Any questions on that one? I'll be honest with you, I'm not sure I have a clear picture, but, so this one would be added to stay status quo.
Yes, Mr. Chairman.
Okay. Please, co-chair.
So as I read this, you could put a tax lien against my ringtone. Is that correct?
Director, please.
So, Mr. Chairman, Mr. Co-Chairman, the answer is technically yes, but it's more related to past due liabilities if you didn't report the sales or use tax to us. So I hope that helps.
Co-chair, please.
I'm having a little fun with this, so excuse me, but is this self-reporting? So if I download a ringtone or something of that nature that is not taxed on its way through, do I need to report that?
Director?
Mr. Chairman, Mr. Co-Chairman, the answer is yes.
All right, other questions? All right. Please proceed, sir.
Okay, thank you, Mr. Chairman. My next comment that I have is related to, on page 19, lines 2 through 5. This is a very long paragraph. It might be better clarification-wise, maybe if that was a different Romanette. For on line 2, the county treasurer may collect the tax due and any interest, penalties, or costs of collection through a collection agency or by the filing of a civil action. That, if you go back to page 18, lines 23 through 24, there may be a clarification point to distinguish those.
Sorry, clarification for what?
Sure. So
Please.
on page 18, line 23, the tax shall not be collected if the vehicle was previously registered by the same non-resident owner in another state. Just distinguishing that's different from the county treasurer having the ability to enter into a collection agency contract.
Okay. What's your concern in this particular case? It's clarification. Is your concern with the structure here? Are you proposing a structural change at some point or in this? What are you proposing, Director? Sorry.
Yeah, thank you, Mr. Chairman. Yes, it's just a clarification point on the structure. Again, not changing any of the language. If it is a different Romanette or something along those lines, just a clarification point for constituents.
Where would you split it? Do you split it if you were going to do that? Do you split it on line 2? Is that where you're trying to break that out, or are you trying to break it out in line 23?
Mr. Chairman, yes, on line 2, but I would defer to Mr. Anderson on that structural component.
Thank you. Mr. Anderson, please.
Yeah, Mr. Chairman, yeah, I think that would make sense to make that change on page 19, line 2, and make that a new paragraph.
And you'd break that right at the line 2, the county treasurer, right there.
Correct.
You
Mr. Chairman.
proposed that was a new Romanette,
Yes, I think from Director Fanning's comments, I think
which
that
wouldn't
would,
change
that would
anything,
make
you
sense.
just make it clear.
Yes, sir.
Thank you. Sorry, I'm slow catching up with all these. Okay, please proceed, Director.
Thank you, Mr. Chairman. The next comment I have is on page 22, lines 20 through 29. And this relates to the 40,000 and the 10,000 that currently is happening in statute right now. As Mr. Anderson alluded to, keeping those separate, making it $40,000 in sales tax and $10,000 in use tax that the county treasurers get. Keeping that separate as it's currently written in this bill draft doesn't mean any additional personnel or no additional programming. So that's a really good structural change. It keeps things exactly as they are right now. Combining those to 50,000, the Department of Revenue, our system, we wouldn't know if it's 50,000 in sales tax, 50,000 in use tax. Again, not discussing changing those amounts, just keeping them separate as they are right now requires no programming.
Okay, so we wouldn't make a change. We'll leave it exactly the way it's worded here.
Yes, Mr. Chairman.
Thank you, Director.
Okay.
Okay, please proceed.
Page 23, lines 5 through 12. This relates to the 5% amount that county treasurers get to keep right now. I know that Mr. Anderson referenced that there's gonna be conforming changes on this, but right now, it just says 5% of the amount remitted to the department. I think it's noteworthy to add use tax in there if we wanna keep it right now. Without adding use tax into it, that could be 5% of sales and use tax, which is a much bigger figure. If we want to keep it as is, it may be worthwhile the committee to add use tax there.
So you'd add use tax, just somewhere in that paragraph, where's the right add on that? Director, do you have an opinion? Mr. Anderson, do you have an opinion?
Mr. Chairman, I think it would be on page 23, line 10, right after amount. It's the amount of use tax remitted to the department.
Yes, Representative Campbell, please. Thank you.
Thank you, Mr. Chairman, and thank you, Director. Thank you, Mr. Anderson. So this is kind of what I was hinting at. Right now, as it is, 5% of the use tax can go into the general fund of that county. And unless we specifically include that, we are going to include 5% of the sales tax as well, unintentionally. Is that correct, sir?
Director, please.
Mr. Chairman, Representative Cannon, correct.
Thank you, sir. I would like to suggest that we do put use in there and modify that to where it stays consistent, where we keep it the same. No further questions,
Hold
Mr. Chairman.
that for when we work the bill, but thank you.
Okay, thank you.
Okay, Director, please proceed.
Thank you, Mr. Chairman. That concludes the comments that I have related to this bill draft. Again, very long
All right.
bill, lots going on, but it will shorten bills going into the future.
Great. All right, any other questions from the committee? Representative Riggins.
Yeah, Director Fanning, thank you. So the final draft of this bill, is it gonna include all this language in a much larger document if it goes to introduction?
Mr. Anderson, please.
Mr. Chairman, so the bill will be longer, but it won't be much additional language. It'll be mostly provisions that we're bringing in and striking references. Will pretty much be the only additions to this that we don't see now, other than any changes that the committee might make today.
Thank you.
Senator Case, please.
Mr. Chairman, it will be a big bill, but it'll tend to take things away and put them somewhere else. But in the end, this is really a great thing that we're taking this on. It'll help our taxpayers and it'll help us, and we're doing this for the future. It's really gonna make it more understandable. And to know that the taxes due, irregardless if you bought it in-state or out-of-state, and is gonna be the essence of it. And this is gonna be a really good thing for administration. It'll make legislators' jobs easier. They won't make mistakes. I served on this committee for a long time, and we did have that one instance where we missed the use tax reference at the sales tax. But otherwise, we did pretty good most of the time, but it's a lot of extra work. Thousands of pages over time, and we're gonna save them.
Thank you, Senator. Other questions? And you're through your items. Any other questions for these two gentlemen? And don't get too far, because when we start working the bill, we probably will need you here. All right, public comment, please. Anyone who wants to speak to this bill? Public's making it easy on me. Do we have anybody online I need to worry about? Oh, wow. I'm getting the easy public comment today, right? Everybody looked at this bill, and after their eyes glazed over, they went easy on us. Anyway, thank you guys for that. So if we're sure nobody online, nobody in the room, one last call for in the room? All right, right. Who was that? Senator Case moved the bill, seconded by Representative Lucas, let's work the bill, or let's, discussions, amendments. What's the committee's pleasure on this? Okay, let's do that. Let's go back page by page and walk through this. I think that will be easier, much easier. So let's, really, the first changes are on page 2. Any amendments? Okay. We have that staff comment on page 3. Senator Ide.
Yeah, thank you, Mr. Chairman. I think if I understand it right, to keep this, to avoid additional licensing, that we should incorporate this staff comment on the definition of vendor. So I would move to add that language to this bill.
Okay.
Thank you.
Is there a second? Okay. Representative Stivar, second. Discussion on the amendment. I do this verbally, or you want me to take? Okay, all in favor of this amendment, say aye. Aye. Opposed? All right. Let's move on then. Let's go page by page. We have some staff comments on page 4 also with the NAICS codes. Bring the NAICS codes up to speed. There was a discussion there. Committee, your pleasure on that one. Senator Case moved it. Representative Campbell seconded. Discussion on this proposed amendment. All right. Sure. Representative Lucas, please.
Thank you, Mr. Chairman. So I'm just curious then how that would read. And I guess, is there any downside to not naming a specific year of the code?
The code changes.
I know it does, yeah. And so we've had a named code, so I'm just wondering then if there's a downside to not having a named number code and
Named
just say
code.
more recent, because I think. that's
Actually,
neat.
Mr. Anderson, if you're comfortable here or from there, but because we'll probably, or Director, in fact, if you guys want to be up here while we're working the bill, that would be awesome, but whatever you're comfortable with.
Sure thing, Mr. Chairman. So, in general, I think the practice is to reference a specific year rather than, as amended. But there are certainly examples both ways, and I defer to Director Fanning if he has a preference.
Director Fanning.
Thank you, Mr. Chairman. No preference on what the committee would like to do as far as this.
So on this one, add it, don't add it. It doesn't really affect the way you operate. Is that accurate? But this at least brings it up as a current reference. Is that accurate?
Yes, Mr. Chairman.
Okay. Did that help, Representative Lucas?
Yes, it does. It's pretty elegant. I like it. I just wanted to make sure that we're not going to run into problems later on.
Okay. All right. Any other discussion on this amendment? We're still on the amendment? No discussion? All in favor of this amendment? The amendment is to add it. Say aye. Aye. Opposed? Okay. Moving along then. Changes on page 5. Any amendments? And 6. Seeing none, page 7. There was a proposal on that staff comment. Any thoughts on that?
Mr. Chairman?
Oh, Representative Storr, Representative Storr, I'm sorry, I don't look quite far enough past the end of the counter here, but please proceed.
That's okay. I believe that the amendment might be to then include paragraph E that's included in the staff comment.
Are you making that amendment,
Yeah,
Representative Storr?
Mr. Fanning explained
Okay.
what that does.
Okay, Representative Storr has moved that amendment. Representative Lucas has seconded it. Discussion on that amendment.
And Mr. Chairman, if I could have leeway to work with the department on that language, because I think it might need cleaned up a little bit, but I think as long as we can have a little bit of leeway to work with him to make that work, I think that would be good, Mr. Chairman.
And Representative Storer, you moved it, or you're okay with that, I assume? That giving them, thank you, Representative Storer. And yes, and discussion on this proposed amendment. Seeing none, all in favor say aye.
Aye.
Opposed? All right. Let's see, so we're page 7, page 8. Any comments or amendments? Page 9. 10. I'll move as fast as I can. Page 11. There was a discussion on that one, on the staff comment on page 11. Any comments or discussion from the committee? That was a text. Okay. Page 12. Page 13. Page 14. Nothing on 15. Oh, there's a staff comment on 15, but I don't know that there's any proposals. 17. $18. Page 19. Representative Stivar.
This is where the area that we need to add on line 2. I can't read my writing.
I think we were breaking out to a new
Break
Romanette.
it, the new Romanette.
Mr. Anderson.
Yes, sir, Mr. Chairman, yeah, that's correct. It would be page 19, line 2, after state, we'd just make that a new paragraph.
New paragraph. All right, that's. No second.
Okay. Moved by Representative Stivar, seconded by Representative Brown. All right, discussion on that amendment? All right, all in favor, say aye.
Aye.
Opposed? Okay, moving along, we're getting close here, guys. Page 20. Page 21. There's a staff comment, but 23, page 23. Representative Riggins.
This is the paragraph where you want to add some describing language between, including sales and use tax, right?
So, Mr. Chairman, I believe the change would be on page 23, line 10, after amount, we would say of use tax.
Is that your motion, Representative
Certainly,
Riggins?
I'll take their recommendation.
Okay, very good. And Senator, Representative Campbell? Seconded it, very good. All right, discussion on that change?
Mr. Chairman, just for clarity.
Senator Case?
The word amount is in that sentence 2 times, or that line 2 times, so it'd go at the end of the second one, and it's a good change.
Well, let me take a step back. So it's at the end, you make a point. So at the end of the second amount?
Second amount, yes.
Second amount, okay. Yeah, I did too, actually. So, okay, and thank you, Senator Case. I was writing that down wrong, I'm sorry. Representative Riggins, as the mover, you okay? That's the change, that's acceptable. And the second, just want to make sure everybody's happy. Okay.
Yes,
Very
sir.
good. And Senator, thank you for bringing us all in focus. All right, very good. Any other discussions on that one? All right, all in favor, say aye.
Aye.
Opposed? Okay, and page 24. Page 25. All right, so Representative Lucas.
Thank you, Mr. Chairman. I just wanted to back up for a moment to page 11, because I had noted that there was a recommendation there, but perhaps I am in error, for lines 24 through 29 to be added. Is that so, or is this an important paragraph?
And Mr. Anderson, please.
Mr. Chairman, that was one of the recommendations of the department, I think, so.
Okay, and?
So then my question would be, what happens, what is the importance if we don't add that in? Because we haven't addressed that one.
So is that Mr. Anderson or the director?
I would defer to Director Fanning on that one, Mr. Chairman.
Thank you, Mr. Chairman. So without putting that language in there, it does change. If we look at 3915-108D1, yes, it is different. It says on the sales tax side, it said the lien, this is currently in statute right now, 3915-108D1, that's what's outlined on page 11, lines 28 through 29. The language says the lien does not have preference over pre-existed indebtedness, but shall have priority from and after the date of filing or recording. And then it goes on, there is a difference there. So right now, sales tax liens have different preferences than apparently what's in our use tax liens. Yeah. And then similar.
So in one case, it says it does not have preference. In the other case, it says it has preference except
Yep.
in the cases of a valid mortgage or other liens of record filed by or prior to the date. So it basically, it doesn't have preference. In this case, it says it doesn't other than liens that these specific liens. So that's the difference, committee, or well, I guess I should say, is that accurate, Director?
Yeah, Mr. Chairman, this would be if there is an amendment on the table, one where Mr. Anderson and myself should probably work together to make sure that we get the language that jives with exactly how it's working today.
And I guess that's my question. So there is lien language, it sounds like, in the use tax already. So this would change that.
In both sections, Mr. Chairman, so I think Director Fanning is just wants to make sure that we can conform them so that there's not a change in how they're working in either case. But there is lien language existing in both sales and use tax right now.
And Director, are you applying the process? I guess that's the real question of the day, is understanding the difference between that language, which I quite honestly, I'm not sure I fully appreciate at this moment. So committee, I'm open to discussion on this, depending on what you want to do, whether you want to move it or whether we want to discuss this at a later time, so.
Thank you, Mr.
Representative Lucas.
Chairman. I would favor taking the time needed to make sure that we craft the language to match how we currently practice and not to make a change that we're not aware of or intending at this moment.
In that case, unless there's a motion specifically, then we probably want to, if this were to proceed, whatever, would be a topic of discussion. Senator Case, please.
Mr. Chairman, Mr. Fanning, is it you're leaning that the use tax language is more appropriate? Kind of, that has the exceptions for the existing mortgages specific?
Director, please.
Mr. Chairman, Senator Case, I want to do some more research for you. My apologies on that.
Okay. Well, I would suggest that we make them consistent no matter what, and then we could switch the direction for the existing mortgages if we had to. Mr. Anderson,
So-
can we ask
Senator,
Mr. Anderson if he has a thought about how we might do that and give us a path forward?
So
Get them consistent first and then with a,
Mr. Chairman,
Mr. Anderson,
I think two ways I think we could go forward now. You could make kind of an amendment, just essentially directing staff to work with the department and make them consistent. Or I think the alternative would be to leave it as is in the bill, and then we could work together to prepare a draft amendment to bring to committee during session. So either way,
Senator
Mr.
Case?
Chairman.
Follow up? Yep.
I'm a little worried. These guys are gonna do a great job and they will have an amendment, but we might forget this totally. If we don't tweak this section right now, then we won't have something that jogs our memory when we get to that point. Jogs everybody's memory.
Committee? Mr. Anderson.
So, Mr. Chairman, if you wanted to take that approach, I think just a motion for a conceptual amendment to work with the department and make these conform.
Senator Case? Okay. Okay. Representative Campbell seconded that? All right. Any discussion? All in favor, say aye. Aye. Opposed? All right. And I think that we had, Senator Ide, please.
Yeah, well, thank you, Mr. Chairman. Just to back up on page 4, where that, we made that amendment on the North American Industry Classification System from 2002 to 22. I guess I don't know what's in 22 versus 02. I kind of look at a lot of these counties adopt international building code, kind of rubber stamp it a lot of time, and nobody really knows how that affects everything. So is there a difference in 02 from 22 in that language?
Director, please.
Mr. Chairman, Senator Ide, yes, there are differences. And it varies depending upon which industry classification you're looking at on the extent of the differences.
Representative Campbell, please.
Thank you, Mr. Chairman, and thank you, Director. This is kind of a code of standards. Isn't this like an international operation standard? I mean, it's a standard. I don't know who sets the standard, but it is a standard that is updated, and that is the importance of staying with the current system, correct?
Director.
Mr. Chairman, Representative Campbell, yes, correct. So that organization, so NAICS actually stands for the North American Industry Classification System. And so that's kind of a standard that if you look, for example, if you look at reports on our website by tax collected, we put out a major NAICS code report, and then we put out a minor NAICS code report. And so we will classify businesses in our system based upon these codes. So that is generally you're going to want to have the most current. You could have something in this language that says use the most current language as opposed to 2022. Again, Mr. Chairman, through to Senator Ide, if you wanted to keep it the same, there's really no harm, no foul as is as well.
Senator Ide.
Yeah, thank you, Mr. Chairman. You know, it's maybe not a huge issue. I just, after thinking about it as we moved on, those two dates, you know, without knowing that language in 2022, I would make a motion that we rescind that amendment and just leave it as it is right now.
So Senator Ide has moved that we rescind the amendment. Is there a second?
Mr. Chairman? Mr. Chairman, Representative Storer has her hand raised as well.
Representative Storer, hang on one second. Let me just get an amendment, but then I'll bring you on. Is there a second?
No worries.
Representative Brown has seconded it. Representative Storer, please proceed. Oh, no, I didn't want to cut you off. Sorry, go ahead.
It's on something else, so let's figure this out first.
Okay, sorry about that. I apologize for missing you there.
It's all
Okay, so discussion on this, because on this new amendment. So this would actually kind of re-amend, remove the amendment we put in before, so please.
Mr. Director, I would ask for. Mr. Director, if I could, I would like to ask for state advice on this, because how would that affect you with going with not the current standard? Does that affect you in any way?
Mr. Chairman, Representative Campbell, in the grand scheme of things, it doesn't. It doesn't. Most of the industry classification codes are pretty consistent, although they add and they remove codes as the years go on and the new additions do. So if there's no amendment or it's a reversal of the amendment, we're status quo. If you update it to the most current version or 2022, we're still status quo as well.
Okay, all right. Any other comments? Senator Case.
Well, Mr. Chairman, these things do evolve over time, and they, not necessarily in the main categories, but they get new subcategories that come about. And, I think it would be useful to have the most current version, because this, in essence, matches up our tax statutes with the federal government's use of the NAICS codes with respect to business activities. And, if you don't have a match there, you could have the possibility that some activity, it would be unclear whether it's taxable or not. And I think we should avoid being unclear. And I do agree with Mr. Fanning that this, it doesn't change that much, but it does change. And I don't know if any of you are old enough to remember, but the NAICS is a new code. Before that, it was the SIC code, and we had to change everything to move from that. And that was quite a bit of a different approach. So I think it would be better to have the most current version.
Representative Biden.
Yeah, thank you,
Or
Mr.
Senator, sorry.
Chairman. Yeah, it's good discussion. I don't know what's in the 2002 one, so it could be better, but typically government codes get worse over time. And that's where I'm leery of, it may be innocuous either way, but voting on moving to 2022 without knowing what's in the first one or in the second one, I'm probably against the amendment. Thank you.
Sorry, going back to the amendment, you still want to leave the amendment in place? Okay. Okay, Representative Riggins.
Thank you, Mr. Chairman. I was wondering if Director Fanning or Mr. Anderson happen to know, do they use this code in other statute for references for other divisions, other departments?
Mr. Anderson, Director, whoever best.
Not sure, Mr. Chairman. I believe there are other references to it. I don't know if it's tied specifically to this definition of NAICS code. I'd have to go and do a little looking, but I believe it's referenced in several spots throughout the code, Mr. Chairman.
Okay.
Thank you, Mr. Chairman.
Representative Campbell.
Thank you, Mr. Chairman, and thank you, Director. Thank you, Mr. Anderson. So just to tidy this up and simplify things, if we were to stay with the 2002 edition, we're staying consistent and it's still giving us the clarification that we're seeking, correct?
Director.
Mr. Chairman, Representative Campbell, correct.
All right, any other comments? Seeing none, all in favor say aye.
Aye.
Opposed? All right, so that, we've removed that amendment.
Mr. Chairman,
Senator Case.
just, horses are dead when they're beaten usually. But I did look and see, I just asked, what are the changes to the NAICS code since 2000? And there are new industries that have come about since 2000 that now have codes like web search portals, social networks, media streaming services, publishing, construction, and manufacturing all had major changes to how they're classified since 2000.
Thank you. Discussion? Further discussion? Okay, I'm going to ask the department maybe to provide the committee maybe some additional information on this moving forward. Depending on what happens with this bill, if it moves forward, we'll see what happens in the vote here today with the bill. But if it does, I would ask that you provide additional information so the committee can be prepared if it passes the vote and is moved to the floor. I think the committee should be informed on this. So please, if you could maybe provide some additional insight into this. Senator Case, does that make sense to you? I think we absolutely should do.
Sure, like I say, the horse is dead today, but there are a lot of changes and it's just weird, like, for example, fireproofing contractors were moved to the drywall insulation contractor, code 23831 from a different code, you know?
Sure.
Whether that activity moved from something we consider to be taxable to non-taxable or vice versa, probably not, but it does make a difference.
So I'm going to make an ask that you get us some additional data, and so we maybe educate ourselves better on that. So if it were to move forward, maybe we could make a better decision if it were to move forward. Okay, thank you, Senator, for bringing that to our attention. And Representative Storr, I sort of cut you off before, and I apologize again, since I've become an expert at that, and I didn't mean to.
No worries.
Please proceed.
Thank you, Mr. Chairman. Per the staff comment that is on the bottom of page 22, I would suggest we amend on the bottom of page 21, essentially just turning the $40,000 and $10,000 numbers into one number of 50,000. So of combined sales tax and use tax is what that's doing. So it doesn't make a change. It just allows them to be combined. So on page 21, line 26, $40,000 would be changed to 50. And then I think it would work just to delete on line 27, $10,000 of. So it would read 50,000 of sales tax and use tax.
Is there a second? Senator Case seconded that motion. Discussion? And Director, just for clarification, that was, it stays the same if we leave it 40 and 10. Just wanted clarification on that.
Yes, Mr. Chairman, if we were to make that change, how much of sales tax and how much of use tax do we do? If the language as currently is in the bill draft right now, we don't have to do any additional programming, there's no changes. Combining those creates some additional IT considerations.
Okay. All right. So Representative Storr, so you want to keep that motion?
Thank you, Mr. Chairman. I guess I would just ask Brett if that provides some greater flexibility and if that programming is something reasonable.
Director Fanning.
Mr. Chairman, Representative Storr, absolutely, I can look into that. I did not have a fiscal note done for the cost of that, but I'm certainly willing to do it. Mr. Chairman, my question for you to Representative Storr is, so would the ask there be to combine all sales and use tax, and then we give 50,000 of that to our counties? I think that's kind of the ask I would need there, and is that the due diligence you'd like me to do?
Well, I'm going to have to defer to the amendment from Representative Storr, because I know that at least your opinion was it stays the same as currently worded, so, and you'd have to program to change, so it just depends on what you want to do, Representative Storr, with your amendment.
Thank you, Mr. Chairman. I'll tell you what, why don't I'd like to maybe bring this up during the session and see if it makes sense and visit with Mr. Fanning between now and then to make sure.
So you withdraw or you want to?
I'll withdraw.
Okay, withdraw the second. Senator Case, is that? Yeah. Okay, fair enough, okay.
Sorry.
And again, I think, Director, just maybe some information to make sure. Thank you, Representative Storr, for working that too as well. Okay, other amendments? Anything else we need to amend? Any other changes? If not, we are really close to on time. I'm seeing none. I guess we can pull the vote on this bill. Do I need to voice vote this, or do you guys want me to roll call it? Roll call.
This is a roll call vote on 26 LSO 0201 Sales and Use Tax Reorganization as amended. Senator Case? Aye. Senator Dockstader?
Aye.
Senator Ide?
Aye.
Senator Pappas is excused. Representative Brown?
Aye.
Representative Campbell?
Aye.
Representative Lean?
Excused.
Representative Lucas?
Aye.
Representative Riggins?
Aye.
Representative Storer?
Aye.
Representative Stivar?
Aye.
Representative Worf is excused. Co-Chairman McEwen?
Aye.
Chairman Locke?
Aye.
That is 11 aye and 3 excused, Mr. Chairman.
All right. Okay, you want to take a couple minutes and then move on to the second, or we just move on? We will take a quick 10-minute break and we will get back on the next section here when we get back.
No more deer? No more deer?
Sorry. This one is the sales and use tax exemptions discussion. I think most of the people in the room, we've had a lot of conversations back and forth on this one. This one stemmed from the last meeting a little bit. There was lots of topics. This is primarily focused on the data centers. And we were trying to get some general information on the taxing structure around data centers and that sort of thing. So I guess at this point, I think it's probably the Department of Revenue is going to give us a little bit of a rundown. I know there's lots of people in the room that want to join in on this conversation. We probably should start with the department and maybe. No, nothing from the department on this topic? Okay. Nobody wants to speak from the department on this property tax exemption piece, or sales tax exemption, sorry. Sales director.
Thank you, Mr. Chairman.
Please,
Again,
Director.
Brett Fanning, Director of the Department of Revenue. Mr. Chairman, since our last meeting in August, there were numerous kind of conversations that happened outside of these meetings. The Department of Revenue was involved with some of them, but not all of them. And so I think that the members in the room sitting behind me may have much better information because they were more on the boots on the ground as it applies to how the data center impacts the state of Wyoming in a variety of aspects: tax revenue, jobs, business, fill in the blank. So I do think there are better resources behind me for this specific topic right now.
And let me just say, thank you, Director, for that. And let me just say, that's actually probably part of the problem, and that we'll discuss. And that was, I would say, what this committee more than likely observed more than anything was the fact that we have an issue, a broader issue here. And that's why there's no bill associated with this, just so everyone knows at this point. But that's why we kind of wanted to rehash this. What became obvious to, I think, most of the people on the committee, at least last time, was the lack of clarity the lack of available information, even from your perspective. There's these exemptions that exist. We have no idea what the impact of these exemptions are. We have very little feel for the overall revenue generated by the data centers, what's generated, what's not, because of the reporting requirements being as loose as they are. And so this was more than anything an attempt to maybe get some additional detail and some more precise information so this committee can make decisions with actually some data. So thank you for bringing that up. But I would, again, I think probably the most important thing that you didn't say that is obvious is the fact that reporting, for example, is an issue on this. There's almost no way for anybody to make good decisions on what makes sense for the state of Wyoming and what doesn't in the absence of some changes to reporting. One man's opinion, of course, but I think that that's where the questions and comments will be. So at this point, if there are people who would like to speak on this topic, we would absolutely love to hear from you. And by the way, in this section, this is one of those sections, I might have falsely thought this was a 1-hour session that could have turned into a 4-hour session. That being said, maybe that's not the case, but everyone try to keep your comments as tight as we can. Let's try to move this along just in case if there are a lot of people in the audience that want to speak. I want to give people the opportunity to do that. Try not to repeat too much. But thank you so much for the Wyoming Business Council for coming up and speaking to us. Appreciate that.
Mr. Chairman, members of the committee, my name is Josh Durrell. I'm the CEO of the Wyoming Business Council. With me today is Ron Goldberg. He's the director of our strategic partnerships. More than anything, we wanted to present information to you to understand the details of the data center tax exemption. I think sometimes when you have a name like data center tax exemption, we make an assumption that they're exempt from all taxes, and that's just not the case. And so we've developed a graphic that I hope helps kind of clear up what is exempt and what is not. And I think as you mentioned, there are folks in the room who can give us a better detail on the taxes that are paid and they might have clients, they may have tenants of their business parks to better understand that. But I just wanted to, more than anything, provide a framework to understand how these exemptions work, what is exempt and what is not exempt, so that, as you mentioned, that committee can make the best decisions possible with the information you have. What we do not have is we do not have the levels, the dollar figures for the exemptions or what a typical exemption might be, or the taxes that are levied and paid by these companies. So we don't have that in front of you. More than anything, I was hoping to just show this framework. And so with that, I could walk through it, or we could just have you review it and ask me any questions that you feel appropriate. It's your pleasure, sir.
I'd be okay if you walked through it, committee, unless somebody have a disagreement with that. I'd love to have you walk through it just real quickly.
Yeah.
Thank you,
Yes,
Mr. Durrell.
yes, sir.
Appreciate it.
Thank you, Mr. Chairman. So the way this works is that the first step in this is that a data center needs to apply to the Wyoming Business Council to be certified as a data center. And at that point, we provide a letter to the data center that then they can file with the Department of Revenue to claim this exemption. Now, this exemption is, it's possible that it's a little more complicated than it needs to be right now, I will say that, in that there are two different tiers that a data center company could fit in. It's based on the investment that they're making, and we factor in their CapEx and building size, the jobs and wages, and electric and gas usage. And depending on that, they fit into one of two tiers. Now, these tiers are pretty old, so the numbers in them may not make sense for the investments that data centers are making today. But there's a tier one that's $5 million and a tier two that's $50 million. And I think if you read some of the headlines on the investment that a lot of these folks are making now, chances are pretty good everybody's in tier two. But we look at that because that determines what is exempt in your sales tax. Now, what is exempt in sales tax for tier one type data centers is the computer equipment and the servers and software. For tier two, it is those two items, computer equipment, servers and software, their uninterruptible power supplies, backup power generation, any specialized HVAC equipment they might have, and air quality control equipment. So you could think of sort of the guts of the equipment that makes up the guts of a data center is exempt in terms of sales tax. Now, what is not exempt are all other purchases, obviously any of the construction that's going on, any taxes on electricity. I think it's important to note that electricity is something that these data centers utilize quite a bit of, and so they're paying sales tax on electricity. And then their property taxes are also not exempt. And so no property taxes, personal or real, are eligible for exemption through this particular incentive. And so with that, I think it will help to understand the level of exemption, what is exempt, and how that might factor in. Does that help the committee understand the exemption better?
Committee, comments, questions? Director, or Representative Ide, or Senator Ide. I'll get there. Give me a couple minutes.
I'll go by either. That's good. Thank you, Mr. Chairman. Yeah, thanks, Josh, for being here. Mr. Durrell, sorry to be too casual here. I just kind of have a question here. Is that data centers must work with the Wyoming Business Council to receive certification to be eligible for exemption status. So how does the Wyoming Business Council become the arbiter of that? Where's that authority come from? And what happens if there isn't a Wyoming Business Council? Where would that go? Thank you.
Mr. Durrell.
Mr. Chairman, Senator Ide, good question. So we have, it's in a statute that's listed here, 39-15-105, S34 for anybody who's in the depths there, that they would need to apply to us to get that certification. They don't have to do that, They could continue to operate their business as they wish and pay all of the taxes that they want to. However, if they want to get this exemption, they would do that. Now, in the event that there wasn't a Wyoming Business Council, I would guess that we might need to take a look at that particular statute and make some adjustments to that statute so that perhaps the Department of Revenue or some other body could make that determination. It's also possible that could be that you could strike that altogether and find another mechanism for certification of those data centers.
Is that all right? Yep, please.
Yeah, thank you, Mr. Chairman. Mr. Durrell, yeah, that was a good answer to kind of clear that up. By and large, I would think all data centers would make that application. Do you ever have one that doesn't apply for that exemption? Thank you.
Mr. Durrell.
Mr. Chairman, Senator Ide, at the risk of sounding like I'm being cute, if a tree falls in the forest and no one's there to hear it, I'm not sure if it makes a sound. And what I mean by that is we don't know about those that don't take it because we just don't know about them. So I think it's a good question, but I don't have the data on that to know. I like you, I would guess that all of them would take advantage of this. And in fact, what we find is that if a state doesn't offer this exemption, it is incredibly unlikely that a data center would choose that state as its location to build. That tends to be, as we discuss with site selectors and companies who work in data centers, if you don't have that, they don't even consider your state, because there are plenty of states that do offer that. And so when we compete with other states, that's sort of the first question that they ask is this exemption available like it is in so many other states? And if it is not, you're just not considered. So I like you, I would guess that all of them apply and want to be certified for that. And it also ensures that we have them. So great question. Thank you, sir.
Follow-up. Representative Campbell.
Thank you, Mr. Chairman, and thank you, Director and Mr. Goldberg for being here. My question is, as far as state selection, I can understand the exemption status, but Wyoming has so many other tax advantages that other states do not have. How do we correlate that in there to where, we want to make as much money as we can for the revenue for our state, but at the same time, we do want to be competitive. How do we factor that in, the different tax structures and how that makes us appealing or not? Thank you.
Mr. Durrell.
Chairman, Representative Campbell, I think that's a really good global question. It's obviously a question that this committee is wrestling with and we want to understand. We sort of beat our chest about the low tax environment and how it's the key to all business recruitment. And what I would tell you, it is a key, but it is a very small key, and it is not the most important key that we have. When businesses are looking at the state, of course, they look at these tax exemptions because these are on elements where they are going to incur a great amount of taxes because these are part of running their business. Those things like corporate tax or personal income tax that their employees might face, those factor in, but they're just not as important as we sort of make them out to be. But the real question, and I think this may be appropriate as an interim topic, is how do we analyze that entire world or landscape and try to understand it from the business's point of view? I think it's a really good question. And in our mind, it's a question that we ask all of the businesses that we recruit into Wyoming. What is most important to you? We don't necessarily lead and say, we have low taxes, you should come here. We say, what are your business challenges that you want to face? And how do we help you line up with what Wyoming offers? And again, I think it's a really good question. I think it's something that we should analyze fully and with either the help of this committee in the interim and working with the businesses that we know come to this state. I think it's something that would really help educate all of us on how tax is a tool and what should we double down on that low tax? Should we work on not having it so low so that people have certainty, what it might be? We should be willing to explore that and not go in with any preconceived notions.
Yeah. Senator Campbell, or Representative Campbell.
Quick follow-up. Thank you, Mr. Chairman. Thank you guys for your time. This is a little bit, but on reporting requirements, there is no reporting. These are blanket exemptions. They're very broad. And because they are so blanket and very broad, what would do you think that it would hinder anything as far as attracting new businesses? But I do think that we should have some sort of reporting requirement on there just to keep everybody above board. Does that make sense, sir?
Sure.
Mr. Chairman, Representative Campbell, I think in concept, you're exactly right. I think we should take a look at that and understand it better. There are typically two reasons that it hasn't been there in the past, is that one, we want to be incredibly business friendly. I mean, we do. We want to keep that overhead low in terms of reporting. However, more states are requiring reporting from data centers so that they may receive this data center exemption. And what I would say we would want to explore is that we would definitely not want to be our requirements to be higher than any other state, but at least and perhaps even exactly the same as other states, so that it doesn't add an extra burden on these businesses that they might not face. So if they're already reporting to Virginia, for example, maybe we take that legislation, take a look at it, see if it makes sense for Wyoming, and propose, and again, I think it's really important in these cases to work with the businesses that are here and the businesses that are looking at Wyoming and make sure we're not putting an undue burden on them. I also think that at one point, one of the challenges that we faced was that by and large, there were very few data center companies who were here. And so the reporting, even if we aggregated it, would have really been pretty obvious who it was. We had one very, very large data center and we had a number of smaller ones. And it was pretty obvious who was making up the bulk of that reporting. And so that gives people pause to maybe show any kind of trade secret or anything like that. But I think now we have a landscape of data centers where not one data center is going to stick out unlike the others. I think that aggregated data is going to be useful. But again, I think it's incredibly important for us to work with those businesses and understand what they're doing for other states so that we can mirror that and not add undue burden on them.
Sorry, follow up. Representative Lean.
Thank you, Mr. Chairman. Thank you for being here today, Mr. Durrell. I know that in the sales and use tax exemptions, it's bigger than just data centers. And so I'd like to expand for just a moment on what is the Wyoming Business Council doing to help the economy in Wyoming? As we find ourselves kind of in a stagnant location, what are we doing with the Wyoming Business Council and the sales and use tax exemptions? Is that a portion of your conversations, the corporate tax, the ad valorem taxes, the severance taxes for our mineral industry, are those a portion of the conversation when the Wyoming Business Council is looking at economic diversity within the state?
Mr. Durrell.
Mr. Chairman and Representative Lean, that's a big question, so we may use that hour that you. No, I think it's a really good question for us to explore. I also think it's important for us to separate. Especially in Wyoming, it's really difficult in a room like this, in a place like this, when we're focused on the things that a group like us focuses on. We focus on revenue. Turns out you're in the committee to focus on revenue. However, there's a disconnect between revenue and our economic stability or security into the future, and that's reality. When you look at revenue, our revenue might be doing well at some points in our history and even today. But if you look at the economic indicators that a typical Wyomingite might see, there's a disconnect. And so I think your question is really a good one, and that is, do our revenue tools and in most cases, those are taxes, do our revenue tools line up with where we want to go as a state and within our economy? We do look individually at each of the exemptions, and we utilize those as a tool for the businesses that might be here. So it might be manufacturing, sales and use. It might be these data center. We utilize those and help people understand what they are so that they can take full advantage and continue to grow the number of jobs that they have, the wages that they pay, and make sure that they are providing opportunities for those students who are graduating high school or graduating college here, because those are the indicators that we look at. Those are the economic indicators we look at. We look at revenue almost secondary because it's not something that we have direct control over. But I think it's a really good question. And again, when we have taken a look at our revenue system, we actually have a number of teams right now across the state, not just working at the Business Council, but a number of people across the state looking at revenue and what it means in our fiscal system. We would like to be able to work with this committee to make sure that it's aligned with the incentives of a good and stable economy into the future. We think human potential is an incredibly important part of the future. Yet frankly, our fiscal system is not based on that. And so there's a challenge and a disconnect there that we would like to explore. And again, I'm not here to pitch interim topics because I know that you probably got a few that you want to work on. But I do think that disconnect between revenue and those other economic indicators that are really important to the people who are living in our communities, I think that's something we should explore and see if we can't at least bring some alignment there. So I appreciate your question. The short answer is yes, we utilize those tools. We don't look at all of the elements for a lot of the energy projects. That's probably more the purview of the Wyoming Energy Authority. But in terms of manufacturing, data centers and things like that, we do. Yeah, great question.
Co-chair. Kind of, I want to add on, sorry, Representative Lean, did you want to follow up? Or I do want to add on to that, because one of the things that you've brought up a couple of times, and this is maybe a half a step off of this specific conversation, but one of the things that I think we've had conversations with other people on is the fact that one of the things that's hard to see is the jobs piece of this. So when you bring in jobs, conceptually, whether I bring in, depending on low-end, mid-range, high-end jobs, every one of these has revenue impacts to the local communities, the state, the whole 9 yards. That's one of the pieces that's kind of hard to see and hard to visualize, for at least for this committee. And we've had this conversation kind of between us, and we realized we see some of these other numbers, the numbers that flow through the Department of Revenue. We see those numbers. We know that this reporting is a hurdle, and we're not trying to make it so cumbersome that it's detrimental to business or making it hard. But at the end of the day, we can't make good decisions in the absence of understanding those revenue streams. What does make sense, what doesn't make sense. And in the absence of data, people make it up. Let's just be honest. And that probably even includes us up here on occasion, right? And that's why I think we're trying to get to the point where we can see real numbers. You can look at the numbers and say, oh yeah, that really does make sense. Or maybe it doesn't make sense. We need to take a good hard look at that and have a lot bigger discussion. One piece of that, and this is what I guess I'm kind of throwing back in your court, and I think there's others in this room that maybe not in this room, but certainly this would fall in your court. This revenue committee needs to understand that when you create 10 jobs, 10 low-level, mid-level, upper jobs, what is the revenue impact of that? Because we turn around and say, well, wait, hey, wasn't the jobs enough? That's a good question. In the absence of an understanding of that at a deeper level, and I would guess that for the most part, you look across the communities across Wyoming, those numbers are pretty consistent. If you add 10 mid-level jobs, it's going to look like this roughly. That is one piece that I think it's been hard for this revenue committee to see. And understanding a lot of us are new, but that's a piece that's missing for us. And I don't know if that's something that you guys can help bring to the table, but that's something that would help at least this committee when we're looking at these things, because those are numbers that are very hard to grab out of this, out of these different data, this data we get. So, sorry, I probably belabored that too much. Other questions for?
Mr. Chairman, Representative Storer is online.
Oh, Representative Storer, not going to cut you off this time. I'm sorry about that. Go ahead, please proceed.
Thank you, Mr. Chairman. Thank you, Mr. Durrell, for being here. I just want to want to understand the history a little better. What I can't understand is that when we created these exemptions for data centers back in 2010 and 2011, we then did require a report that spoke to jobs and a number of other factors. This legislature, this body then in 2024 repealed that requirement in that was in 39-15-105B in 2024 via House Bill 197. And the argument for doing so had to do with the fact that that we weren't actually getting great information out of the reports. And the Department of Revenue asked the question, is there a possibility to clarify, enhance, or remove this reporting requirement? So the legislature chose to remove the reporting requirement, though obviously we're hearing interest in perhaps bringing that back. But the last report we have is from 2023. It showed that only the survey went out to 5 data centers, only 2 answered, only 1 had used the exemption. So I guess I'm curious I just want to understand better how it is this the reporting was not was it not a requirement? And why we weren't getting good survey responses, and how we can do a better job of doing this if we're going to move forward with a new reporting requirement. Thank you.
Mr. Grow.
Mr. Chairman, Ms. Storer, thank you for that. I appreciate you asking that question. It may have been a requirement, but it had no teeth. And I think that that's a challenge, and it's something that we understand that type of thing happens. We put these requirements in, or we maybe it was a may instead of a shall, or something to that effect, and it had no recourse. One of the things that we've been working to do in other programs is to make sure that we put some teeth into the requirements, and we don't mean them in some sort of a negative way, but we do feel like it's important to have a requirement to do those, and to make sure that there's some level of recourse that we can take if it's not met. And I just think that that's an important component to any of these requirements.
Thank you.
Follow up? Representative Storer?
Not at the moment, thanks.
Okay, thank you. Representative Campbell.
Thank you, Mr. Chairman. Thank you, Mr. Drill. One of my concerns is with this, like you said, that there is no teeth in the reporting. In order for us to be able to look to where we can have enforcement, we need to have consistency. And I think that's one of the biggest things that one of the data sets that we're missing right now is we don't have enough information to where we can see consistency, to where we can make a conscious decision on what we're doing. And I think that's one of the things that this body is looking for, is we're trying to find a standard, some sort of, this is gonna be consistent across the board with all of these, so we can make some sort of rules that will do what we want to accomplish, if that makes sense, sir.
Mr. Chairman, if I might just add a tad bit of commentary. I understand the desire for consistency and to try to make a blanket statement, if you will. I do think that the way some of these exemptions are targeted to solve a particular problem, it may be challenging to do that. But one thing I would always suggest, and I think this is a really important part about reporting, is that if I come up with a report, or this committee comes up with a report, and it comes out of my head and it doesn't involve the industry, it's gonna fail. There's just no doubt. I believe that this should be an industry-led reporting element. I think that the industry should weigh in, because they understand what they're doing in other states. They also understand what they have, again, ready access. And I also think it just sends a signal that we put businesses in the position where they get to help us create what's best. And I feel like I feel really strongly that they will come to the table and want to help with that. And so again, I wouldn't want to make it, and I wouldn't want you to make it, because I think that the chances of success are lower than working closely with industry and having them lead some of those conversations. And again, it's gonna depend on the exemption, it's gonna depend on the industry we're working with, but again, I think that opportunity is there.
Please.
In follow-up that, I'm just very curious on this. I totally agree, sir, that we do need to include the industries. But we also have other ways of looking at things. Do we utilize our other existing state agencies to where perhaps we can look and see if we see consistency from within already? Does that make sense, sir?
Mr. Durrell.
Yeah, Mr. Chairman and Representative Campbell, we, for this particular situation, it's possible that we do, but we don't necessarily take a look at it with the other agencies that are involved. I'm sure that there are other reporting that has to happen within other agencies. We've done that in the past with other programs, specifically with the business relief programs and the CARES Act. We sort of envisioned it like stacking up Swiss cheese. Each of our agencies sort of have holes in the cheese that we don't have all of the data, but together we sort of have a full picture. And so I see what you're saying there. And so I think that is maybe an opportunity to get all of that. You're right.
Final question. Thank you, Mr. Chairman. The way that I'm going at this is,
Hey, Representative Campbell, I don't want to hammer on these guys too hard for
right.
reporting, because ultimately, I think that's probably a Department of Revenue discussion, to be perfectly honest with you, and where that goes. So I think these are the wrong guys to beat on for that. So that being said, Co-Chair, please, you had a question.
It's reporting.
Oh, please, go ahead.
If we came up with a report using the industry, would it make sense to you either do the report and you get the exemption, or if you don't do the report, you don't get the exemption? Would you support that? Thank you, Mr.
Mr.
Chairman.
Durrell.
Mr. Chairman, let me see if I can dance around this one.
And I take that back. We are going to put you on the spot, so never.
No, well, here's what I will say is that I'm in the executive branch, and therefore, if a rule is legislated and put into statute, I will execute that. I think the key is to work with industry to find out what will work. What we have typically found when you work with industry, they want to be good stewards. They want to pay their own way. They want to do the reporting that is important, as long as they can see the benefit to the state, and as long as they can realize that they can do it without a ton of extra work that takes them away from their business. I would support a process in which the industry is brought to the table. I would support a process that, like we have today. And again, as I mentioned, we're in the executive branch and we'll execute on what is put before us.
Yeah, Mr. Co-Chair, please.
It's interesting. Earlier, I heard you guys say there's no teeth to any of the reporting requirements. And now we kind of are examining teeth. I do think they need to be involved. And I'd like to know if they're paying taxes on all their ringtones.
Okay. Should have known ringtone might be the theme for the day. Anyway, Representative Riggins, please.
Thank you, Mr. Chairman, Mr. Durrell and Ron. If you do have a reporting requirement, we have hundreds of companies that get tax exemptions. And all for likely for the same reasons. I can remember you're trying to encourage and help manufacturers, trying to get, expand their footprint, grow the GDP. And so, to me, any reporting requirement, especially if it's gonna be a serious effort where you have to report, you're gonna have to include all these industries, every single one of them that get tax exemptions. Now, you might wanna put a dollar amount. I know of some very small manufacturers. I mean, 1- and 2-man or 3-man operations who would just rather forego any types of, just forget about the sales tax exemption, just pay that rather than fill out the report. But when we hear from the DOR, they have maybe the fact that you're only sending out 7 or 8 or 9 surveys, unless they go much wider than I'm aware of, they would have to incur some more expenses. You're gonna have to send out hundreds of those and demand hundreds of those come back up, wouldn't you believe? I mean, I don't think you're gonna be able to single out a handful of companies and do that. This has to be broadly applied, to be fair.
Mr. Durrell, if you would like to respond, let's keep it quick. But if there's other people who want to speak, please fill the chair.
Yeah, and Mr. Chairman and Representative Riggins, I think the answer is yes to that.
Thank you. Go ahead, Representative Campbell, but please make it quick.
I'm going to be very,
If there's
very,
other
very
people who want to
brief
speak, I'd
on
like you to
this,
fill the chair.
but I'm going to tell you this applies to so many different things. The problem that I'm seeing that I would like you guys to help me with is right now our Industrial Siting Council, who approves most of this, interacts with every state agency has the ability to enter into contract individually with each individual business. Because each individual has the ability to enter into contract as an individual agency, there is no consistency. They may make a contract with Company B, that they make a different contract with Company A. So I'm looking at a way to where we can dial this in. I just want you to be cognitive of it, sir. But I'm looking for a way to where we can find consistently, holistically, and I think that's a big portion of it. Thank you.
Mr. Durrell.
Mr. Co-Chair and Representative Campbell, thank you.
All right. Okay, Representative Lean.
Thank you, Mr.
please,
Chairman.
Depending on who this is going to, let's make it quick because we need to move on if there's anybody else going to speak. And if nobody else is going to speak, this will be easy.
Thank you, Mr. Chairman. Mr. Durrell, I would like to know what the Wyoming Business Center is doing when it's working with data centers to come to inspire our economy in Wyoming. What are you doing to protect the ratepayers when they show up in Wyoming?
Mr. Co-Chair and Representative Lean, I would assume that you're talking about the electrical ratepayers, and I think as a general rule, these large load producer or consumers do not negatively affect the rates. However, that's probably a better question for the PSC and maybe the gentleman on my left here. You're right, because that is typically not an issue. However, I think that that is a really complicated and challenging environment that I would like to turn over to Mr. Bush, if I could. And let me just say that that if this is the last time I get to talk to you all, it has been a pleasure, and it's clear that you like to talk to me. So thank you very much, and have a great day. If you need to call me back from the gallery over here, I'm happy to step up there. Thank you.
Oh, thank you. Sir, please proceed.
What a
Introduce
beautiful
yourself and
segue.
proceed. Yeah, exactly.
David Bush with Black Hills Energy. I think, as I've spoken to the committee before, we are sort of the epicenter of data centers here in Cheyenne, and as the electric provider, we are the ones really focused on providing the data centers with their power. To Representative Lean's question, I believe you all heard from the Public Service Commission and the Office of Consumer Advocate at your August meeting as well, but the contracts that we have with the data centers are structured in such a way that they do not impact our other customers. In fact, they benefit our other customers. That contract is called the Large Power Contract Service Contract. It's a tariff, LPCS. So the tenets of that are laid out in statute. That comes back to the innovative rate-making statute that was passed back in 2012-ish. It was before my time with the company, so I don't know the exact date, but that was part of the piece that allowed us to attract Microsoft to Cheyenne when they were interested in coming here. Along with the sales tax exemptions, we recognized that we needed to have some protections in place for our other customers and to be able to serve these large loads. Prior to that, honestly, we were pretty small in the customers that we served. This was a game changer for us, having a load this size coming to our system. So the contract itself has several pieces to it. And one of those requirements is that and this is also included in statute, is that it does not negatively impact our other customers. And the way that we do that is the power and everything that these data centers and other large customers may need. Right now, it's primarily data centers, but technically could be a large manufacturing or something like that as well could use this. They pay for all the power. They pay for all the infrastructure they need. If they need a new substation, if they need new transmission lines, whatever it may be, they pay for it. We don't rate base that, meaning we don't charge our other customers those costs. The Public Service Commission has to sign off on this. Everything we do has to go through them, so they are the ones that really are the arbiters of that. The Office of Consumer Advocate also is included in that, and as you all know, they are the ones that are charged with protecting other ratepayers. So we go through the process of securing the power that those large loads will need, any infrastructure they need. We basically work through all that for them, and we're ring fencing them from the rest of our customers. So we're protecting our other ratepayers from those potential risks that could come with having all that power. Nationally, I'll say I've seen a lot of stories lately, mostly on the East Coast and some in the South, about concerns about data centers increasing electricity rates. I don't know why those other utilities don't do what we do, but the way we've done it here has been shown to really protect our existing customers, and they do benefit from it. There's a transmission credit for the lines that those large data centers use. They pay a fee basically to use those transmission lines. That fee is then credited back to our other customers' bills. The numbers I have it was about $2 million. Yeah, about $2 million in base rate reductions. And that is for our 42,000-ish customers here in the Cheyenne area. So our existing customers are actually seeing a benefit from those large loads. The large loads also help stabilize our system. Think of any business when you have a large customer, a consistent large customer that you know every year is going to come in and buy whatever product you're selling. You can count on that person to really help stabilize your business. You're not doing this as much. We're the same in the utility world. When we have these large customers that are consistent, these are big investments. As Mr. Durrell mentioned, they are, and there's others in the room that have the solid numbers, but we're talking billions of dollars that they're investing in Laramie County. They're going to be here for a while, as long as we continue to be a good business environment. Part of that is the sales tax exemption. Part of that is on us as the power provider to ensure that they have the things that they need and that we continue to be a good partner with them as well. So the really long-winded answer is we have the contracts in place. They're approved by the Public Service Commission. The Office of Consumer Advocate also weighs in on that. And unlike other areas where it may be an issue, these contracts do actually benefit our other customers and provide a benefit to them, so.
Any questions? Co-chair, please.
Yeah, this is really for my understanding. Are we looking at, are the data centers looking at bringing power in behind the meter or in front of it in their own power company?
Mr. Bush, please.
And if, how do we generate revenue off that?
Mr. Bush.
Mr. Chairman, Mr. Co-Chairman, yes, there are. So each of these large customers is required to have their own backup capacity. So if something goes down, they're not a further burden on the system. So generally that's either behind the meter generation that they have on site. So if our lines go down, which it didn't impact Cheyenne last week, but the outage that happened last week, I should probably not bring that up, but the outage that happened last week, say, their backup kicks on immediately. And that's primarily for them, it's behind the meter. They just can't afford to be down. It costs them too much money when when they're not computing and doing what they need to do. There are some, there's been conversation around building their own generation that they can then use for not only their needs, but others as well. That's a larger conversation happening in some of the electricity markets around the country. There's some projects in Wyoming that are looking at doing that kind of thing, and that's it's a big investment for them, and it's something that we're talking with them as well. On the revenue side, I would have to punt to someone else, Senator. I don't know for sure how that would work. If it's their own generation, I believe it's not taxed, as long as they're using it for themselves. If they build generation and sell it to, say, one other person, as well as themselves, then I think that would be a taxable event to that other person, but I'm not the expert on that. I'm just trying to remember some of the questions that have been asked about that before.
Follow-up?
Real quick, it kind of reminds me of what we were dealing with a couple years ago, net metering with solar systems. I don't know the answer, that's why I was asking.
Yeah, and Mr. Chairman, Mr. Co-Chairman, and Senator Case is probably gonna start throwing stuff at me, but the net metering discussion is also, that is part of what I'm kind of leaning into, is I know that that is not taxable because they're using it for their own benefit. They're not selling it to someone else per se. And so that's, I think, the difference between if you're doing net metering and you're doing, say, utility scale generation project for one of these data centers, and then they're gonna sell excess to somebody else. I think that's where it gets into a little trickier situation, so.
Other questions? Senator Ide.
Thank you, Mr. Chairman. Just a real quick question, Mr. Bush. Is Black Hills Energy involved in any other markets outside of Cheyenne? Just, I'm curious if you have other Wyoming locations that you're doing business in. Thank you.
Mr. Bush.
Mr. Chairman, Senator Ide, yep. So so a basic rundown of us in Wyoming is we've got the Wyodak coal mine up outside of Gillette. We've got coal-fired generation plants there as well. Many of you have probably seen the mine with the conveyor belt that runs right under the interstate, goes over the other side. The Wyodak plant is also over there. That's 80% owned by Rocky Mountain Power, 20% owned by us. And then we have a few coal units in there as well and some natural gas. Most of our footprint in the state is natural gas, as well as the other states that we operate in. We have electric in the Newcastle area that's served by our South Dakota utility, which is electric, Black Hills Power. And then natural gas from Cody, Riverton, Lander, Rollins, Laramie, Casper, Gillette, kind of draw a line and east of there, Torrington, Wheatland. So most of it is a natural gas footprint, and the same in Arkansas, Nebraska, Kansas, and South Dakota's all electric. Colorado, we have electric in Pueblo and natural gas in other areas, so.
Senator Ide, follow-up.
Just a real quick follow-up. Sorry, I probably wasn't as specific as I should be. Is this the only data center market that you guys are involved with?
Oh,
Thank you, Mr. Chairman.
Mr. Chairman, Senator Ide, yes, Cheyenne, because this is our primary electric utility down here, so Cheyenne is it for us right now. We're looking at South Dakota and Colorado as well, but so far, our major footprint has been the Cheyenne area due to the fiber that runs through here along I-80, and the proximity to Denver with a major airport has also been key. And really just the willingness of the landowners here. The data centers are all located on private land, so landowners have worked with them, and I'd like to say that we've taken a little credit for being part of that too, so.
Representative Lean.
Thank you, Mr. Chairman. Thank you, Mr. Bush, for coming today, and thank you for speaking to my prior question. My current question would be, when you're putting in these transmission lines, is there any funding that comes from other state agencies, the Wyoming Business Authority, the Wyoming Energy Authority, the Wyoming Business Council, any of them that you receive in exchange for not putting this on our ratepayers?
Mr. Chairman, Representative Lean, I would have to triple check, but I don't believe so, no. The transmission lines that we've had to put in have again been paid for by those large customers that have needed them, which again is how we prevent from having some of those costs come on to our other customers. We are doing a project right now called Ready Wyoming, which is a 260 mile transmission line that's running down from kind of the Converse County area and a little bit south of Gillette, coming down this way, and it's connecting our facilities and for Cheyenne. That is for the benefit of our other customers. That's right now we're on the WAPA system, Western Area Power Authority, and we had some capacity constraints and other issues that we were looking at as far as our ability to continue to serve our customers. So long-term, this was a better deal for our customers to build that transmission line. So they are paying for that one, as well as our large customers are also contributing to that. And because of the amount of power that they use is sort of the basis on how much they pay, they're actually paying a significant portion of that build out as opposed to our other customers.
Representative Lean, please.
Thank you, Mr. Chairman. On a follow-up to that, is the exported energy from Wyoming, have any of your out-of-state customers received from the data centers coming into Wyoming, have they had any kind of service disruptions in their power?
Mr. Bush.
Mr. Chairman, Representative Lean. So I'm sorry, are you asking if the data centers have caused outages for other customers in other states?
Yes, sir.
Mr. Chairman, Representative Lean, not to my knowledge, no. There's been no interruptions because, again, the way our contract is set up, if we need that power, we can actually call them and say, hey, we're having issues, and they can turn on their backup generation and use that instead. There's also a reserve margin that's included with that. So it gets a little complicated, but say you need 100 megawatts of power, and I tried to explain this at corporations last week as well, and I think I butchered it then too, but I'll try again. So if they need 100 megawatts of power, we require them to basically be responsible for 115 megawatts. So we're planning for the peak might be 100 megawatts, but that extra 15 is kind of a buffer in case there is a large event where we need more power. It's hard sometimes to determine peak loads. So we do our best to try to make sure that if there is an event that we have the power that we need to cover those, instead of saying, okay, you need 100 megawatts, we're only going to have you plan for 100 megawatts. We build in that extra 15% or whatever the number may be to make sure. But in answer to your question, to my knowledge, we haven't had any outages in other states due to the data centers.
Thank you, Mr. Bush, for coming up. Anybody else want to speak to this? Anybody can speak to data center case, please.
Mr. Chairman, I'd just like to caution a little bit here. I don't totally agree with the way Mr. Bush characterized this being in a perfect world with respect to data centers. And I do think we got to give the real customer protection pieces that were in that piece of the law came from this legislature. And we need to remember that we put those in there. But that does not necessarily apply to all loads. It doesn't apply to all utilities. And the commission is working to expand the applicability of that. And there's also a phenomenon because Wyoming sets their rates on the basis of what's called embedded costs versus incremental costs. Even the basic calculations may not always result in the customer benefits that I think he's pushing the envelope on in saying exist. I think it's a good tariff. It is a national model. It's not even totally applicable all the way across Wyoming. So we need to be careful here. Thank you.
Thank you, Senator. Other questions, comments? Does anybody else want to speak to this topic more generally in terms of if anybody has numbers, information that would be helpful for the committee? We would love that. And I know many have worked on this and we are experiencing very rapidly. Oh, please.
Mr. Chairman, we do have someone online as well, Mr. Dan Diario, if you would like to take him now or at another time.
Well, I was actually hoping we would get people to speak to the numbers, which we've asked for, but at the end of the day, if that, it remains an evasive conversation and no one wants to speak to that, I want to speak to people in the room first, if there's anybody who wants to speak to this topic, but this was actually the exact reason we got into this conversation further, because when it came to data centers, we asked for data and we got nothing. And it's okay, here we are again, getting nothing. And so Representative Lean, you have a comment or a question or?
Mr. Chairman, whether it's before or after the man online, I would ask that we bring up the Department of Revenue as I have a couple of questions for them.
Yeah, fair enough, we will do that, because I do think this reporting, this is going to distill down probably more to the reporting issue, since the clear message, I would say, of today is there are no numbers. And certainly nobody wants to speak to them. So let's start with, let's go ahead to public comment. Whoever wants to speak to it, let's go ahead with the person online if they would like to speak to it. That'd be great.
You should be online now, Mr. Chairman.
Hello, Mr. Chairman. Can you hear me?
I can, yes, sir.
Thank you very much, sir. My name is Dan Diorio. I am Vice President of State Policy for the Data Center Coalition. DCC is the National Membership Association for the data center industry. Our membership includes leading data center owners and operators, including those that have invested in Wyoming, as well as companies that lease large amounts of data center capacity. Today, there's unprecedented demand for digital services that have become central to our daily lives. Everything from the way we work and learn to how we buy groceries, bank, and even access medical care now occurs online. The average household has 21 connected devices, and consumers and businesses are expected to generate twice as much data in the next 5 years as they did in the previous 10. So this growth is driven by widespread adoption of cloud computing, as well as the proliferation of those connected devices and the rapid scaling of technologies like generative AI, which could add between 2.6 trillion and 4.4 trillion in economic value. Digital infrastructure is also a critical component of the United States global economic competitiveness and national security by keeping the people of Wyoming, their data safe and securely domestically. The Trump administration has recognized this and has made the development of robust energy and digital infrastructure a key priority in securing our country's economic future. There are several important factors that data center companies consider when making site selection decisions. The overarching factor is time to market. Data centers are working to build out the infrastructure to serve demand from consumers and businesses, and all indications are that we are still behind meeting that demand. But also important factors are access to robust available energy and other infrastructure, as well as tax and regulatory climate. Wyoming's pro-business and growth policies, including the sales and use tax exemption for computer equipment in data centers, are key in securing Wyoming's competitiveness for data center development. 36 other states have similar policies encouraging data center development, and the landscape continues to get more competitive every year. Other large data center markets, including Virginia, which is the largest market globally, and Georgia, which is the fastest growing U.S. market, have determined that 90% of data center investment would not have occurred but for the tax exemption program. Continued commitment to the program creates long-term regulatory certainty and predictability that enables hundreds of millions of dollars, if not billions of dollars, in capital investments. And to your point about data, I'd like to point out a recent report that came out from PwC. DCC commissioned this report from PwC. It's based on publicly available data that they can find. And we, as DCC, commissioning the report, we have no control over their methodology and the results that they found. But they found that direct jobs in Wyoming's data center industry increased 11% year over year from 2022 to 2023. If you look at direct, indirect, and induced deployment, the industry supported nearly 4,000 total jobs in 2023 and contributed to 210 million in annual labor income. In 2023 alone, the industry, again, looking at those direct, indirect, and induced effects, contributed $365 million to Wyoming's GDP and generated $26 million in state and local tax revenues. By prioritizing investments in local communities, data centers catalyze supply chain and service ecosystems, creating jobs for thousands of construction professionals, as facilities are built and providing quality high-wage jobs to support ongoing operations. Every data center comes with years of reliable support for local economies by promoting job creation at restaurants, hotels, car rental agencies, fiber and HVAC installers, steel fabricators, manufacturing, and many other businesses. Nationally, for every one job in a data center, 6 jobs are supported elsewhere in the economy. The data center industry continues to invest in Wyoming and helps drive economic growth in the Cowboy State. Again, Wyoming's continued commitment to its sales tax exemption program sends a clear signal to the industry of regulatory certainty and predictability that are essential for these large capital investments. I'd be happy to send the information that I just mentioned on the PwC report to the committee. And I also want to say that the data center industry stands ready to work with the Wyoming Legislature on reporting requirements. And we'd be happy to lean in there, provide examples from other states, and help craft a good policy that helps you get the information you need on a regular basis. So thank you again for your time today, and I'm happy to take any questions.
Questions for Mr. DiOrio?
Mr. Chairman.
Senator Case.
Thank you very much, Mr. Chairman. Mr. DiOrio, thank you for your testimony today. You mentioned an 11% increase in employment. Can you tell what the base numbers were before and after the 11%?
Mr. DiOrio.
How many people were employed directly and indirectly?
Sure. I'd have to get the exact 2022 numbers. That it was 3,900 total jobs in 2023, and I believe is around 500 direct jobs in the data center industry. But I can get you those exact numbers. I don't have them up here on my screen, but I'd be happy to send those to you.
And Mr. Chairman, then
please.
We're searching for information as to what the cost per job is of the employment, for example. That's part of the reporting requirements that we're searching for. So do you have any idea what the taxes foregone per job created would be in Wyoming?
Mr. DiOrio.
Mr. Chairman, thank you, Senator, for the question. I believe it would very much depend on the size of the facility and the amount of servers in the facility that would be exempted from the sales tax program per job. But again, what I would point to is that data centers create strong business ecosystems around them. If you go to any data center, you'll find the parking lot full on an operational data center on a daily basis of electricians, plumbers, pipe fitters, HVAC technicians, all coming from the local community that are necessary to keep that facility operating at an optimal level at all times. So I think looking at the exact job, sales tax exemption per exact job, I don't think would quite capture the business ecosystem effect that data centers have. But I'd be happy to research that and get back to you with it.
Mr. Chairman, really want to emphasize this, that you bring back a solid report that Senator Case has asked for here. There's always a great concern that we have insatiable amounts of power being used, but we can't tag it to a certain amount of jobs and what it really does for our communities. If you could get us a solid report, we would appreciate it.
Mr. DiOrio, I have to echo what Senator Dockstader and Senator Case have said, and what you've offered here is providing us that additional data. I think that would be very valuable to this committee and your involvement, quite honestly, in this reporting process. Because this is one of our problems right now. I'm saying it again, and maybe that's a mistake, but we just want to be able to make good quality decisions in the state of Wyoming. One other aspect of the data that you would provide, and I want to throw this out the committee too, I don't know how you feel about this, but I would like to understand how the state of Wyoming, as it comes to tax exemptions and favorability to data centers, how we stack up against other states. That's some additional information I might ask of you if you've got it available. You try to hit that fairly quickly, but that's something that I think would also be very valuable for us to see in this process as well. So thank you, Senator.
Mr. Chairman, if I may, I'd be happy to respond to, briefly to your comments there. One of the things I think that it really is key for Wyoming is access to robust energy infrastructure. And I think that's one important consideration, and it's becoming an increasingly important consideration overall for the industry. is access to robust energy infrastructure in addition to available land, workforce that's available, and tax and regulatory climate. So I think I would point out that Wyoming certainly has advantages to many of the other states in the surrounding areas. And what I would point out is that I actually reside down in Denver, Colorado, and what I can tell you is that Wyoming is far and away ahead of the state of Colorado when it comes to data center development for all the reasons that I just mentioned.
Thank you. Follow-up, Senator Dockstader, you're okay? Very good, thank you. Representative Lean.
Thank you, Mr. Chairman. Thank you for joining us today. If I heard you correctly, I believe that you said you're with the Data Center Coalition. And could you please walk us through what that looks like? Is that the Microsoft? Is that Prometheus Hyperscale? Is that local Bitcoin miners?
Mr. DiOrio.
Mr. Chairman, Representative, yes, we have the 4 major hyperscalers that are within the industry. So that's AWS, Google, Microsoft, and Meta. The vast majority of our membership are what are called multi-tenant data centers. So they will build a data center and then lease out space inside to any business that needs access to digital infrastructure. That includes companies like Crusoe, who is actively developing in Wyoming. Our membership categories do not include cryptocurrency. That is not, they're not eligible for membership within the Data Center Coalition.
Representative Campbell.
Thank you, Mr. Chairman, and thank you for joining us, Mr. I'm going to mess your name up just so. I apologize. I noticed that most all of this economic, all the tax structure is around jobs pretty much. And my question is, data centers are powered by many different sources. Do you have a breakdown of how many are, I would like to know the jobs by energy source. For example, how many jobs are actually created in your system that you can see from wind and solar as opposed to natural gas, as opposed to nuclear? Can you do that, sir?
Mr. DiOrio.
Mr. Chairman, thank you for the question. I think that would be exceedingly difficult to do, if only because data centers are end users on a system that may use a variety of different generation sources. And so I'd hate to commit to something that I think would be very difficult to break down, just because, again, I think as an end user on a system that can use a variety of different sources within a particular service territory, I think that would be difficult to do.
All right. Thank you, Mr. DiOrio, for taking some time and bringing us up to speed. And we would actually look forward to a lot of that data. I think that would be helpful. So we can at least create a communication. Senator Case, sorry, please.
Very sorry, but the gentleman brought this up. He said that Wyoming is a much better location for data centers than Colorado. I would like to know if, then are we winning the data center fight? Are more data centers going into Wyoming now than in Colorado? And maybe we could give an example of the differences between the two states.
Mr. DiOrio.
Because
Mr. Chairman and Senator, thank you for the question. Yeah, one of the key differences is that Colorado does not have a sales and use tax exemption for data centers. And in terms of large scale data center investments, Wyoming is beating Colorado, and I can tell you that with a fact. Colorado does not have any large scale data center investment. And I think not having a sales and use tax exemption is going to continue to prevent them from doing that. So yes, Wyoming is leading Colorado significantly.
may we get some quantification on that, Mr. Chairman? Thank you.
Mr. DiOrio, is that something you could speak to now, or would you like to provide that data to us? Senator, you want to hear what he has? Well, you can speak to it if you've got the data at your fingertips.
Sure.
You want to quantify it?
Or we can send it later. We can share with the committee.
Whichever is convenient. If you can quantify it, great, let's do it. If not, I kind of along the lines of the request we made, trying to understand where we relate to others. Yeah, we would like to understand that data in more detail, but feel free to speak to it if you could speak to the numbers now.
Yeah, Mr. Chairman, I'd be happy to speak to that right now. What I can tell you is of the three companies that have publicly announced projects or have an existing presence in the state, so Microsoft, Meta, and Crusoe, they have announced significant investments. I can't think of the exact numbers off the top of my head, but they have to be at least in the hundreds of millions of dollars, if not $1 billion plus. And I can tell you that no announcements of that size have been made in Colorado. So I can probably nail down some of those specific numbers based on the public announcements, but I can tell you there is no hundreds of millions of dollars or $1 billion single project going into Colorado right now. But you have at least 3 of those here in Wyoming.
Yeah, Mr. Chairman, and that's wonderful data. It's not just about, we have the biggest one. It's how many, if they have 100 smaller ones that dwarf our big one, they still win. So I need to know the depth of that.
So, do you hear that, Mr. DiOrio?
Yes, sir. And Mr. Chairman, I can tell you that they do not have 100 smaller ones. None of them are significant. And I am very confident in saying that the 3 that are coming into Wyoming would vastly dwarf the smaller data centers in Colorado.
Senator, okay.
That's great. And then what would be the cost of our foregone sales taxes on those data centers coming in? What is it worth? What sales tax are we not collecting for the manufacturer's exemption? Thank you, Mr. Chairman.
Mr. Chairman, if I may just respond briefly, Senator. I think what's key is it would be unlikely that the sales tax revenue would be coming in if the sales tax revenues from the data centers would not be coming in if the exemption was not in place. So the developments would not happen, but for the exemption. So I think we can get specific numbers, depending on each individual project and what the servers would be. But I think it's important to remember that it would be unlikely to raise revenue in the future because those developments would simply not occur. So it's a bit of kind of just how you look at the different budgeting and forecasting on it.
Thank you, Mr. DiOrio. Other questions? All right. Please.
Good morning, Representative Locke, Mr. Chair, and Mr. Co-Chair, and members of the committee. My name is Betsy Hale. I'm the CEO and we'll be doing a comparison of how Wyoming ranks. We did this about 5 years ago, so we're looking forward to updating those numbers as well. So I'll try to get that to you in this committee as soon as we have those results. I do have some local information, and out of respect for Mr. DiOrio, I'll only share the local information. This information was actually compiled by the University of Wyoming Center for Business and Economic Analysis. I'll pass this information on to the LSO and then on to all of you as well on the committee. This is numbers from 2023. The local jobs that are actually at the data centers that are direct data center employees is 284. So these are the campuses that we have open. What's important to note is the campuses that we have open is the location at the North Range Business Park, which has been there since 2012. And then we've just started opening the campus at the Cheyenne Business Parkway Business Park, and we have 2 data halls open at Bison. With the exception of those 2 Microsoft data centers, those are the only campuses that are actually running. We also have an EchoStar data center, so the numbers I'm giving you are aggregate. And that is for their satellite uplink facility, which is located in the Cheyenne Business Parkway Business Park. And we also have Greenhouse Data. Greenhouse Data and EchoStar were actually the first data centers here in Cheyenne. In addition to that, and excuse me, Mr. Chair, none of this data includes cryptocurrency, the facilities that we do have here. So we try to stick just with the data centers. The wages paid on an annual basis are $23 million. The economic value that was added in 2023 was $35 million. That typically results in GDP. The state tax revenues for that year were $700,000, and the county tax revenues were $100,000. I do want to point out that 37 other states do offer this sales and use tax exemption. Many others also offer a sales tax exemption on the power, and that's a very big number. So we will be getting that information to you. That is where we are an outlier, and it is often what you hear our mayor talk about as far as the importance of the data centers, is that sales tax on power. In the past 7 years, the data centers have provided $27 million in sales tax in the past 7 years, and that's an aggregate number. So that's not just Microsoft, that includes Lunavi, that includes EchoStar. It also includes some of the smaller data centers that you might hear about at A&B Bank. We did have a Lumen or US West data center. I believe that one is closed down. So we can get that information for you, but in the absence of the tax information that I've asked the Tax Foundation to get, I haven't prepared a single one-pager for you to provide all that. But I did want to let you know we're working on the data, and I would encourage this body to really think about mandatory reporting. I think that's a fair request, and I do think that there's a group of leaders, not just in the data center industry, but also in the economic development industry and also in local government, that would like to help you, as well as the Department of Revenue, gather that information. And I do think Senator Case, through you, Mr. Chair and Mr. Co-Chair, we will be able to try to get you that number of the opportunity cost, I guess, is really probably what you're looking for, is what's the loss.
Thank you, Ms. Hale. Other question, Representative Ling.
Thank you, Mr. Chairman. Thank you for joining us today. My question about all the data centers in Laramie County is, are any of them set up on state, county, or city land?
They are not. So the ones that we have in our business park was actually, thank you, Mr. Chair, Representative Lean, through you. They were in the Cheyenne Business Parkway Business Park. That is property that Cheyenne Leads bought in 1986 and then again in 1992 out at the North Range Business Park. The data center that you have to the south is a private ranching family in the Bison Business Park. The data center where Meta is being built was a private ranching family as well.
Okay. Any other questions for Ms. Hale? And Ms. Hale, we look forward to the numbers. If you don't mind, send them to the entire committee. I think it'd be helpful for this committee to start understanding kind of what these things look like, because this has been the whole issue, is us getting to that. And committee, if you're okay with it, I'm inclined to say that the conversation with the department on further reporting probably is a bigger conversation than we're going to get to today, if that's okay with the committee. I think we might want to, if there's no more questions for Ms. Hale, and there's nobody else who wants to talk to this, I'm inclined to say let's close this section off, if that's all right with committee. Representative Lean.
Mr. Chairman, could I speak to the revenue for just a moment and ask them 2 questions?
Sure, we will do that. Ms. Hale, thank you so much for bringing that in.
Thank you so much.
And we look forward to the numbers and the communication on this, just so, and maybe even your involvement, or broader involvement in the reporting piece, just to make sure we get that right.
You bet. Thank you, Mr.
Thank you
Chair.
so much.
Thank you, Mr. Co-Chair.
Director, thank you for stepping up. Representative Lean, please.
Mr. Chairman, thank you, and thank you, Director, for joining us. I have 2 questions. One is, who assesses the data centers? Is it the county assessors, or is it the state contract for industrial? And what depreciation scale are they associated on?
Director, please.
Okay, Mr. Chairman, Representative Lean, again, Brett Fanning, Director of the Department of Revenue. And so for the first question, who assesses the property tax on data centers? It's our local county assessors.
Okay.
And then the second part, as far as the depreciation schedule and how that impacts, I'm gonna have to phone a friend. If I could have Administrator Gill come up and he can answer that question.
Thank you, Mr. Gill, for coming up here. Usually we're talking property tax and you have to spend the whole day up here. So you're getting a break today. Sorry, I'm just, please.
Thank you, Mr. Chairman. Ken Gill, Department of Revenue, Property Tax Division, and you'll see plenty of me tomorrow, probably.
Oh, there you go.
To your question, I guess I'm not quite sure, Representative Lean, where you're going with that question. The depreciation scale, I'm not sure what that is.
Mr. Chairman?
Representative Lean.
Mr. Gill, thank you for joining the conversation. So when it comes to personal property taxes, there's a depreciation scale, and last year, the legislature for personal property taxes asked the department to put in a scale so that we could get eventually to 20%. But there's books in your office that take us there, year by year, there's a certain reduction based on, I forget the name of the books that you use within the Department of Revenue. So my question is, when it comes to industry, whether it's this industry of data centers, or commercially, whether it's industrial or commercial depreciation for the data centers, does the depreciation follow that personal property guideline, or does it eventually work to zero?
Mr. Chairman, through you, Representative Lean, it goes to the depreciation floor of 20%. But you have to keep in mind every asset out there is going to have a different life expectancy, where most of our depreciation schedules on the personal property, the servers, let's say, in this case, is 6 years life. We see that typically these are replaced a lot quicker than 6 years. So typically we never see a full depreciation on those servers because they disappear. They're removed from service.
Senator Wright.
Yeah, just real quick, thank you, Mr. Chairman. Either one of you guys, it was mentioned earlier that these data centers are on ranches, and not on city or state property or county. Do they have to go through rezoning to get that ag property into industrial, or are they lease deals or purchase deals for the most part? Thank you.
Yes, you go.
Mr. Chairman, good question, Senator. I would defer to our local counties and our municipalities for that. I'm not an expert on zoning at all.
Okay, any other questions? Department, thank you. I think this conversation on reporting will go well beyond this meeting, but thank you. All right. This was really just an information topic anyway, so there's no other speakers. Let's move on to the next topic. The next topic, let me get to my agenda, but I believe Mr. Richards is. So, Mr. Richards, thank you so much for being here today. Really, more than anything, this should be pretty simple. We were trying to keep it simple, and Ms. Richards, I am sorry, I probably confused the topic a little bit, but thank you for taking some time. We know that Appropriations has been working on this, and really, I just wanted the committee more than anything to kind of understand generally the numbers associated with the sales and use tax numbers in general, as well as roughly what is the Appropriations Committee doing. They're talking about possible changes. We just like to kind of understand that at a high level, just so they're aware more than anything. But we appreciate that, and we appreciate you being here. Thank you.
Thank you, Mr. Chairman, members of the committee. My name is Don Richards. I'm the LSO Budget Fiscal Administrator, and I believe co-chairman of the Joint Appropriations Committee, Representative Bear, will be joining me if permitted by this committee. He's actually in another committee working on some bills. To provide a bit of an introduction, we have a 4% statewide sales and use tax that collects approximately $950 million per year. 4%. So 1% collects about $237 million per year. That's going to change based upon growth of sales taxes or declines. We had an unusual year this year where we actually had a decline in total sales and use tax collections. In the past 20 years, sales and use tax collections have declined 7 out of the last 20.
So the decline, that's 950 was what it declined to? Is that accurate? Thank you.
Yes, Mr. Chairman. The 950 is our kind of current operating assumption.
Okay.
And the municipalities and counties approached the Joint Appropriations Committee and requested the local direct distribution formula to be included on its interim topic list. That was approved by Management Council. And the local direct distribution formula is often referred to as the Madden formula after the former chair of this committee, Representative Madden, although it has certainly been modified since its first inception in the early 2000s. This provides a direct distribution to municipalities and counties that is essentially an inverse of their ability to generate revenue. So more money is going out to less wealthy areas. Niobrara County, for example, gets a substantially large contribution, whereas Teton County and Campbell County get a substantially lower contribution through this direct distribution formula. The direct distribution formula has been approved at least biennially for the last 20 years, and occasionally even annually. It is a non-codified statute, meaning last year's or last biennium's amount has no bearing on the next biennium. The mode, or the most common amount distributed, is $105 million. Yesterday in the governor's budget request, he requests $105 million to continue for the 27-28 fiscal biennium. However, in the last two biennium, 23-24 and 25-26, the legislature has provided a higher amount to municipalities and counties. That amount currently is $146.25 million. So about $40 million higher than that traditional $105 million amount. The Joint Appropriations Committee made a request at their last meeting for a bill draft. They have not voted on this draft. This bill draft would direct 5.6% of the total collections of the 4% statewide sales tax and distribute that through the Madden formula. In fiscal year 2026, that works out to be just almost identical to the 105 amount. Our calculation is if this were in place, it would be $105,274,680. So very close to that 105 amount. Again, the 5.6 million or 5.6% has not been voted on by the committee. And I would be remiss if I didn't indicate that the local communities made their request at 8%, which would be roughly equivalent to the $146 million distribution. This is taken out upfront from the 4%. It does not affect the distribution of the balance of those funds. So the 4% statewide sales and use tax, 69% of that goes to the state's general fund, and 31% of that is distributed to cities, towns, and counties. Under the normal sales and use tax distribution, of course, it is not distributed by the Madden formula. It is distributed based upon first point of sale to the county, and within the county, it's based on population. With one exception, there's a modest $40,000 distribution to all entities before that per capita amount occurs. So what does this end up doing? It means municipalities and counties with high sales and use taxes tend to get more money through the sales and use tax. So think of the Teton counties, Converse County, Campbell County does particularly well on sales and use tax. In Teton County, it's tourism, and it's minerals, oil, gas, and coal in the latter two counties. The Madden formula kind of flips that on its head, and it will distribute a greater share of the sales and use taxes to the less wealthy county. In fact, under the Madden formula, there is a hardship provision, which about 8 counties currently participate in. And you would recognize those counties: Niobrara, Washakie, Crook, Goshen. And it does change year over year because it is a dynamic formula. It changes based upon their local wealth, their assessed value in property taxes, as well as the sales and use taxes they collect. So, for example, Albany County, just to our west, had a large wind turbine development 1 year ago. They dropped out of the hardship county because of that industrial development was so large that they generated a lot of sales and use tax on their own, so they didn't benefit from that inverse calculation for 1 year. We fully expect them to fall back into the hardship category in successive years. So one more, kind of getting into the intricacies here, maybe more than the committee wanted to go, but what would the impact of this legislation, if it is forwarded, be? A couple of things. Number one, the payments would be delayed by 2 months. Municipalities and counties indicated they have no issue with that, but rather than receiving their money in August and January, they would receive it in October and March. It's just a timing issue about when this amount of money is known and available. Secondly, their budgets, municipalities must prepare their budgets in June under the appropriation model, which we've used for 20 years, 10 biennia. The municipalities knew exactly how much they were going to get. Under this model, it's based upon accrued sales taxes, so in June, you don't know quite what you're going to receive. So local city councils, county commissions are likely going to have to make some estimate. And a pretty reasonable estimate is what you got last year. They may have knowledge of a known development like the TerraPower or something like that in their community, which may give them an indication to increase that estimate, but they're going to have to forecast a little bit more. And then finally, their base amount will rise and fall with the growth of sales and use tax, which over time has grown considerably. It doesn't grow every year. As I indicated, about 7 out of the last 20 years, we actually had declines year over year in sales tax collection. But over a long period of time, whatever that base amount decided is very likely to grow. And our Craig forecast anticipates, about a 2-3% growth per year. And that would not require any legislative action under the JAC's bill draft because it would be a formulaic, just like the 69% to the general fund, 31% to local. It would not require the legislature to vote on this every year like you do on the appropriation formula. With that, Mr. Chairman, I will pause, respond to any questions, and turn it over to the good chairman of the Joint Appropriations Committee.
Very good. Chairman Bear, please.
Well, thank you, Mr. Chairman and committee. I appreciate the opportunity to be before you. I apologize that I was up in Management Council and missed the beginning of Mr. Richards' presentation. So I assume, based on his comments, that he went over what we're doing in appropriations with the bill. And I would just stand for questions to fill in unless you need a better explanation of what we're attempting to do. I'll wait for your direction.
Questions for Senator Bear or Senator Hyde?
Thank you, Mr. Chairman. Yeah, I'm glad you brought that up. I just wanted to be clear on your report too. So the bill in appropriations is for 5.6% from the sales tax to go towards the Madden formula. Is that correct? Just maybe go through the details of that a little more. Thank you.
Sure. Mr. Chairman and Senator Ide, thank you for the question. So in particular, Senate File 60 brought by Senator French in the last session was brought to give 5 additional % of the state sales tax to local communities. After discussing with the bringer of that bill and other sponsors, some of them on this committee, what the goal was to replace some of the lost revenue from the 25% tax reduction exemption that was passed in the last session. In the process, that bill ended up before my committee, House Appropriations. We determined that the trading off of property taxes for sales tax was much more complicated than what that was going to be able to accomplish. So we decided to take that up as an interim topic and see exactly how this 5% move would best fit in our revenue policies as well as our appropriations. And one of the things that we have been doing for some time now, I think over 17 years, is doing a direct distribution to small towns and those hardship counties through the Madden formula. I saw this as an opportunity to make it a more stable amount of money that we're sending to those local governments, at the same time reducing the amount of angst, if you will, that local governments have as to whether they're going to get anything. So this is really a stabilization, if you will. As Mr. Richards mentioned, the last time we changed the amount that local governments got versus the state of the sales tax, 4% was about 20 years ago. So theoretically, what we do here, if it passes, would last another couple of decades, and local governments could depend on that revenue for that period of time. So that's the goal, is to replace the direct distribution with this 5.6%. Now, the 5.6% right now, as we calculate it today, looks like $105 million for the biennium. That is what, we chose that number as a starting point because that's where the preponderance of the direct distribution model has turned out. And as it turns out, we just received the governor's recommended budget yesterday, and he also recommends $105 million for direct distribution. So we seem to be in agreement, along those lines, and that's what the 5.6% it comes out to currently. Obviously, sales tax is subject to inflation, so I would anticipate that the $105 million would grow over time, even if the 5.6% stayed the same.
Senator Hyde.
Yeah, thank you, Mr. Chairman. Just a quick follow-up. So on your chart here, that $951 million right now that we collect in sales tax, is that $105 million already deducted from that? Or is it, because it's not shown on that chart there, just curious. Thank you.
Mr. Chairman, Senator Hyde, no, it is not removed from there yet because this legislation hasn't passed yet. So just when I say $105 million, that's the anticipation based on where the bill sits today.
Any other questions? Representative Campbell.
Thank you, Mr. Chairman. Administrator Richards, I'm just kind of curious, do you know, is it just because of inflation that our sales and use tax has fluctuated to where it is? And the reason I ask that question is because our tourism has been up, so it's surprising that with tourism up, that sales and use has gone down. Is that directly related just to inflation, or what's the driver with that, sir? Thank you.
Mr. Chairman, Representative Campbell, you're exactly right. Sectors like lodging accommodations and retail trade are up year over year. However, Wyoming's heavy industries, in particular mining, is down double digit, 20+%. And it turns out oil companies, when they buy pipe, that is subject to sales tax, and that is a tremendous contributor to Wyoming's sales and use tax collections. So when you look at the general trend of sales and use taxes, it does tend to follow mining and severance tax collections.
Any other questions? I think that was great information for the team, at least, and I really appreciate you gentlemen taking the time to at least bring us up to speed. And we knew you were making changes, and I think we've all heard things, but I thought the whole committee should hear it, and just be aware of changes that could be coming our way. And I know there's lots of discussion even tomorrow on some of our bills, but thank you so much, and we really appreciate you guys coming. Just want to make sure, no other questions, right? So I didn't miss anybody. You have a question?
Just a comment on this. It's
Apologize, Senator,
educational. I hope it's educational. So this is like a 101 illustration of how the distribution of sales tax to the state, just giving it back to the towns, has distributional implications. That's where you talk about the Madden formula. We get into that. Think about the implications if we try to replace property taxes with sales taxes collected in areas. It'll have even more severe ramifications, and we'll have to come up with a Madden-type formula to distribute those revenues back to the cities and towns. Think about it. Thank you.
Thank you, Senator. All right, well, we are actually out almost on time, actually. If I think this is a near miracle. Fantastic, thank you so much. One of the things I might do, I know I had kind of set I asked the committee, I'd kind of set us to an hour. Is that okay? Would you guys like to have just a little bit more time? Do we want to maybe set it to an hour and 20 minutes, give ourselves a little more time for lunch?
That'd be easier.
Acceptable, excuse me?
A little longer would be easier.
Okay, let's do that. I think we're going to be okay. A couple of the topics this afternoon. Let's go with an hour and a half, so that'll put us back in here at 1:30. I know there might be some people coming at 1, but that'll give a little wiggle room for everybody to actually eat lunch and prepare for this afternoon, and I think we can get through it well. So we'll recess for lunch. Thank you. Is that okay with everybody?